I think the prospects of these all market-related participant MI companies, be it NSDL, CDSL, BSC, they look very exciting. So if somebody is ready to hold for 2, 3, 4 years, even longer, these companies can give very good returns. So both of them are a buy from our side. Depending on your choice or your funds, you can go ahead.
Okay. All right. So that's the view with regards to where J&K Bank and NSDL stands. And we also had a question on NSDL from Manoj, who was writing us from Mumbai. So Manoj, I hope that answers your query as well. We've got our next question from Kaushik, who's writing us from Gujarat. And his question is on Vari Energies. He's been holding it since IPO and wants a view on this particular counter from a longer term perspective again. So Rajesh, your view on Vari Energies, should he continue to hold?
I think booking partial profit would be a prudent choice at this point of time. The numbers, whatever it is, has already been discounted in the price, and any meaningful upside from these levels looks very difficult at this point of time. So what I would suggest, book partial profit in this and continue with the rest.
Book partial profits for Vari Energies is the view Rajesh has. Okay, we've got our next caller. Jigar is calling us from Mumbai. Jigar, hi, a very good morning to you. How can we help you today?
Hi, good morning, Mahima.
Good morning.
Thanks for taking my call.
Our
Love
pleasure,
your show.
Jigar.
And I don't know if Alex is there, so hi to him also.
Of course, I'm here.
Yes, that's great to talk to you both. My question was on Protean Egov.
Okay.
I have 100 shares, bought 1,000 in the current fall, and I am okay to hold for a long term. I just want to know whether it's really worth a hold or just exit it.
Okay, Jigar, I got your question. Just to follow up on that, what was the thinking behind buying this particular counter?
So when they lost the contract for PAN 2.0,
correct,
there was a big fall, and I believe that the other businesses will continue well, and that's what I thought maybe it's a value buy at this point.
Okay.
But I know LTIM has got the contract, and maybe they will get some other future contracts. So just trying to understand that.
Okay. Point on. Okay, Jigar, I'll take this up with Rajesh then. You know, your analysis is spot on, but want to understand from Rajesh. Rajesh, do you think that fundamentally this is a good company to continue to hold and have in your portfolio from a longer term perspective, considering the PAN 2.0 did not go to them?
Yeah, Mr. Jigar said it right, that when it lost a contract of PAN 2.0, that was a time when everybody went bearish on this counter. It fell from almost 1,400, 1,500 odd rupees to now it's trading at around 700. But I think that was overreaction, I would say, with the kind of strong fundamentals this company has. Yes, I agree the loss of the contract is a very big blow to the company going forward. But still, the other businesses are doing well, the land recognition and all. I think at these levels, it's a buy from our side at 700 odd rupees. I think maybe 15% upside from the next 1 year or 18 months is quite possible. So for a longer term horizon, one can continue to hold.
So hopefully that answers your question, Jigar, and that's the view on Protean Egov. Tube Investment is the name of the counter we're talking about next, and Piyusha Kanodia, who's writing in from Jaipur, has got this stock at a price of 2,955. She's in the green right now. She's asking whether she can add more at the current level for the long term. Vaishali, on the charts, does it look like a good level to add?
I definitely agree. So because the stock overall long-term trend is intact, we've seen a good correction in the recent past. It's consolidating at these levels. So I would say 2,800 to 3,200 is the range of band. So buy near 2,800, which makes it a favorable trade. And since it's a long-term horizon, I'm looking at a target of 4,800 to start with. So I guess this is a good level to accumulate.
You just say 4,800?
Yes.
Wow. And that's an initial target?
Well, that is a long-term target. Initial target will be 3,200 to 3,500 levels. A clarity and confirmation will come above 3,500.
Okay, all right. So considerable upside seen in Tube Investments based on the charts. Rajesh, I'm just curious because there's so much upside that's seen on the charts. Does that also something that you're seeing on the fundamentals?
I totally concur with Vaishali's view. It's a very strong company belonging to the Murugappa group. They're doing very well, moving into EV and all things. At these levels, we have issued a buy call to our clients too. So for a long-term horizon, it's a buy at these levels. One can continue to hold and add to.
All right. Vineet is our next caller, calling us from Hyderabad. Vineet, very good morning to you. How can we help you today?
Yeah, good morning, sir. I am holding Hindustan food shares.
Okay.
I want to know the fundamentals. Based on the fundamentals, can I add more for the 2 years perspective?
And when did you buy the stock?
Almost 3-4 months back.
3-4 months. All right. Rajesh, on the fundamentals, Hindustan Foods bought at levels of 540, so higher than the current market price, but not too far away. Would you hold? Would you add? What's the view?
I would try to switch. Rather, there are better names. Why not go with ITC? That's doing very well with strong balance sheet and the kind of portfolio it has. I think ITC would be a better choice than rather than going for Hindustan Foods or even Hindustan Unilever that's trading at a very good valuations at this point of time with the kind of numbers and growth it has shown.
All right. Okay, so that's with regards to where Hindustan Foods is concerned, and also a view on HUL as well. Okay, we've got our next question. Nalini Subramaniam is writing in from Chennai and wants to know as to which is a better bet amongst the banks that she's given. She wants to know a view on Maharashtra Bank as of now, is what she's saying. Vaishali, I'll come to you on this one. From a 1-year period, do you think Maharashtra Bank is a good counter to make an entry into?
I would say so, because the stock too, I mean, it's one of the good stocks from the PSU sector. And technically, I would say, yes, this is a good level even to add. 53 acts as a near-term support, and I would look at a target of 72 from here on. So I guess good returns from here. One can buy, add, or hold.
All right, so that's the view with regards to where Bank of Maharashtra stands. We've got our next question from Sarthak, who's writing us from Noida. Wants to know about Star Health Insurance. He's holding 1,650 odd shares, bought at 445 a piece, and wants to know if he can hold or sell for the next 2 odd months. Vaishali, your view on the charts?
Well, I don't think I have this. Okay, the one which is 446.
Yes.
Yeah, so I guess continue holding. It is in a consolidation. The trend is intact. So keep 420 as stop loss and look for a target of 480. So that would be the target if we are looking at 2 month horizon.
Got it. Anant is calling us from Bengaluru. Anant, very good morning to you. How can we help you?
Hey, hi. Good morning, Alex and
morning.
Mahima and Rajesh sir. See, I had a question regarding the Newgen software I have with me.
Right.
I'm holding it from a little bit higher level, and I have around 46 shares at around 14.20. I need to just from 2 quarters I'm just following, and the results are not good. Before that, it used to the results were really good and things are good. From last 2 quarters I see it is okay-ish. This is one thing I have, and another small thing is I just need one small information on one of these small cap. I'm not sure whether you guys track it, or will you be able to help me? If you can help me on that, it will be very nice.
What is the name
it's
of the stock?
Dynacon Systems. I also have here in very minimum loss, but again I plan to hold this
two
for DYNA CON.
Dynacon's system. It's 1,300 crore market capitalization company, IT infrastructure related activities.
Correct.
Okay. All right.
These two, I need fundamental, and I also need to know, can I hold it for say around?
I will definitely try on Newgen's software. Let me first try and get your view on that. From what I see, Rajesh, on the fundamentals, June has been a tough quarter. March was actually not bad. The PAT number came in at 108 crore rupees, but there's a sharp decline in the quarter ended June. What would you say about this company?
See, I think try to exit at higher levels. Whenever there is a bounce back in the stock and the market is good, try to get out of the stock around maybe 970, 980 odd levels. That would be a better strategy, because as we all know, IT is facing a tough time at this point of time. Even the larger names like Infosys, TCS, they are facing a tough time. So getting money in mid-cap would be a real tough job too. So it's better to get out of this. If somebody wants to be in IT, maybe switch to Infosys or a TCS, that would be a better choice.
Okay. And any view on this Dynacon Systems?
No, I'm really sorry, Alex. We don't try.
No problem. I want a very quick view on the charts for Newgen, though, since the view on the fundamentals is exit. when the opportunity arises. Where, according to you, Vaishali, is that opportunity?
Well, so Newgen software currently 857, that's the one we are talking about, right?
Right.
So I would say hold on for a bit because it's showing signs of improvement. So keep a stop loss of 800 levels. And I think in all likelihood, this can show a bounce up to 950 to 1050. That is the level which will show tough resistance. Hold till these levels and then we can review it.
Okay. All right. So that's with regards to where Newgen software stands. But quick view on Dynacons, if you can, Vaishali, on the charts, is that possible?
I'll just have a look.
Okay. So, so if you can try to pull the chart up also, it's up 2% in trade today. There you go.
Yeah, and Namrata was pointing out, Namrata, our director, was pointing out that there's an order win. When was it, Namrata?
In the recent
April?
past.
April. About 100 and, what was it? Repeat that again. What was the quantum? 138 crores. See, there you go. These things in our ears, that's where people communicate with us. And luckily, we have people with the information ready. So on the charts, 1015 right now, would you hold at this point, or would you buy fresh?
I would say I would go for it because the risk reward ratio is very favorable. Even on a weekly chart, I'm looking at it, 900 is a level where it's making double bottom. So if 900 levels is taken into consideration, this can go towards 1200. That is the near-term resistance level. If we see a revival right from 1200 levels, this is on a road to recovery. So in my opinion, keep stop loss of 900 and hold.
All right, Utkarsh Small Finance Bank is the name of the counter we're talking about next, and I wonder when the name is going to change, because it's not going to be a small finance bank for very long. The approval has come through from the Reserve Bank of India for it to become a universal bank. We got Rohit from Bengaluru that's holding 745 shares at a price of 39.38 or 39.98 or thereabouts. Stock is currently at 20.76. Would you hold on to this one? And what's the view, Rajesh, on the fundamentals?
I would try to sell. Sell today or maybe after 10% upside, that's 20 to 23. That's your choice, but try to exit.
Apologies, I need to clarify. I've gotten my names confused. AU Small Finance Bank is the name of the company that got a universal bank license, and that stock, of course, has gone up since then. Can we pull up the longer term charts for AU Small Finance Bank? Okay, so it's currently up about 1% in trade. What are the longer term charts suggesting for AU Small Finance Bank? Okay, it's not done too much since that announcement. Saw a bit of a spike and then gave up. So therefore, Rajesh, apologies for my mistake in asking you this question. Between the two, would you prefer the latter, AU?
Yes, of course. We have a buy call on AU since IPO, I would say. We have given at least 2-3 reports on this too. And at these levels, the bank has been doing well, and now with the full banking license coming, I think it's just a matter of time when it starts moving up further from these levels. So it's a buy from our side. Any dip should be taken as an opportunity to accumulate. The management is very conservative. Asset quality for that reason is in manageable level. They have been financing to vehicle loans and all those things. But now with full banking license coming in, I think the prospects are very high. One can buy.
Okay, all right. So one can buy AU Small Finance Bank is the view Rajesh has. We've got our next caller. Arvind is calling us from Uttar Pradesh. Arvind, hi. Very good morning. कैसे मदद करें आपकी?
Good morning, मैम. कैसे हैं आप मैम?
बहुत बढ़िया. आप कैसे हैं?
बढ़िया बढ़िया मैम. मैम मैं एक्चुअली पूछना चाह रहा था कि मेरे को IPO अलॉट हुआ था D-Mart का.
वाओ. ओके.
जो कि 299 का था.
ठीक है.
अब एक्चुअली मुझे ऐसा लगता नहीं है कि कंपाउंडिंग मशीन नहीं रही है, मतलब जिस हिसाब से, क्योंकि बहुत सारे कॉम्पिटिटर आ गए, क्विक सर्विस वाले भी आ गए हैं, लोग आ गए हैं इसमें जी. तो वो मुझे कंपाउंडिंग मशीन नजर नहीं आती. मैं इसको बुक करके मैं NSTL में शिफ्ट होना चाह रहा हूँ.
ठीक है. ओके ओके, इंटरेस्टिंग.
इसकी जगह पे मेरे को क्या कंपाउंडिंग मशीन बनेगी ये NSTL?
ठीक है. आपका एनालिसिस मतलब एकदम ऑन पॉइंट है, और आपने जो पेशेंस दिखाई है स्टॉक के साथ वो भी अप्रिशिएबल है, क्योंकि 2 लाख का आपके पास प्रॉफिट है अभी. ये मैं राजेश के साथ लूँगी. राजेश, D-Mart ही इज़ बीन होल्डिंग सिंस द IPO. And he's been a patient investor, and what he wants to know now is that now that it's not compounding for him, should he switch to something like an NSTL?
my technical liberty in answering in Hindi.
Sure.
Okay. देखिए ऐसा है कि आपने बहुत बढ़िया काम किया डीमार्ट लेकर के, आज आप अच्छे मुनाफे पे बैठे हैं, लॉन्ग टर्म इन्वेस्टमेंट इसी को कहते हैं। और अब आप सही कह रहे हैं कि वो कंपाउंडिंग अब इसमें नहीं है, बावजूद इसके कंपनी अच्छी है लेकिन नंबर्स उतने अच्छे नहीं आ रहे हैं, ग्रोथ स्लो डाउन हो रहा है। तो बेटर होगा कि आपने जो चॉइस करी है एनएसडीएल की, उसको लेकर के बैठें और 2-3 साल का नजरिया रखें। पूरी उम्मीद है कि इतना ज्यादा कंपाउंडिंग नहीं भी होगा तो इससे बेहतर रिटर्न आपको उसमें आ जाएंगे।
Right. So that's a view on NSDL, and congratulations for holding for so long with D-Mart. That's the reward and the compounding that you've received. Gautam is calling us from Visakhapatnam. Gautam, very good morning to you. How can we help you today?
Very good morning, Alex. How are you doing?
Very well. I hope you're well as well. See, I tend to do that, and there are so many wells in that one sentence that it gets a little confusing. How can we help you today?
Yeah, I'm holding Suzlon Energy shares, almost 9,800 shares, and I purchased at average rate at 66 rupees. So I just want to understand, I can hold this share for almost another 1 or 2 years.
Sure.
Do you think is it the right choice, or I need to revise my decision?
Yeah. Fair question to ask. You know, the numbers didn't look too bad in the first quarter, and the numbers came out yesterday. I wonder if you've seen the results. But let me go across to Rajesh on this one. Rajesh, there's the numbers on the one end, and there's also the CFO exit on the other. The latter seems to be having a bearing on the stock today. It's down about 4%. Would you say you can hold for the next 1 to 2 years, though?
Alex, there are two things. One, the numbers have been good. You said it right. They have reduced their debt. They have huge capacity, huge capex going forward. But still at these levels, I think all the positives has been discounted. Any meaningful upside from these levels would take a lot of strength to go forward. Maybe a maximum target of 65, 66 is quite possible in the next 6 months. Renewable energy as a space is very exciting, I would say. So why not switch from Suzlon to a likes of maybe your JSW Energy or a Tata Power? That would be a better choice, and at this point of time.
Right, so that's okay. So that is Rajesh's view, but it's time now for the rapid fire round. And Rajesh and Vaishali, you both know the drill. We'll try to throw as many questions as possible to you, and you can keep the answers as short as possible. We've got our first question from Saurabh Jain, who's writing us from Mumbai. Wants to know if HDFC and ICICI Bank are the right counters to enter into the banking space. Rajesh, your view?
Both are good. Go long on both of them.
Okay, Amber Enterprises bought at 7,814. Jay Krishnan from Kozhikode is asking this. Would you hold for the medium term? Vaishali?
Hold for a medium term with stop loss of 6600.
Okay, Phenolics Industries is the next counter. Ashok Pai from Bangalore wants to know 1 year target for this counter. Vaishali, on the charts?
1 year if the horizon is, then 240 would be the next.
Okay, LIC Housing Finance is the name of the counter. Short-term views being sought, 1 to 2 months. Bought at levels of 614. Siddharth wants to know. Vaishali, would you hold?
Yes, continue holding. This can give you bounce up to 600 at least.
Okay, Shakti Pumps is the next counter. Shashi from Malaysia is writing in and wants a view from a 1 month perspective on this counter. Your view, Vaishali?
So, well, current market price is 860. 1 month horizons range is 840 to 980.
Okay, and would you go long on this one, Rajesh, Shakti Pump?
For 1 month, it's difficult
to say. Long term.
Long term, yes, one can buy.
Okay, Transray Lighting from a longer term perspective, would you go ahead and buy, Rajesh? Suman is asking this question.
Buy.
NLC India, Balakrishnan wants to know, 256 is the buy price. Can you hold for 6 months, Vaishali?
Yes, continue holding. It can go towards, I think, at least 300.
Okay, Voltamp is the next counter. Prashant is asking this question. He's holding 200 shares, bought at 7,900 a piece. Is it a hold or sell? Vaishali, on the charts?
Yes, so Voltamp, please, one can average at these levels. Look for a target of 9,500.
Okay, BLS International for a period of 4 years. Aniket wants to know whether to buy. Rajesh?
I don't think it's a good choice for a long term.
Okay. All right. On that note, that brings us to the end of the rapid fire round and indeed the query segment on the show. Rajesh, Vaishali, thanks so much for joining in and answering all the questions you did. Like I said, that brings us to the end of Ask Profit from Mahima and myself and the entire team that put the show together. Thank you so much for watching and do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली।
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia, and we're going to discuss an infra company today, or rather railway specific company. Titagard Rail is what we're going to break down today. And yes, there are a couple of changes, which is why we're bringing Titagard back fairly quickly on a KYC to redo this and try and understand as to how the picture for FY26 looks like. I'm going to start off with what I want to know, and yes, there's plenty of tailwind with regard to this sector, but there is one concern: wheelset availability. This has been a bit of a drag with regard to where numbers are concerned, especially where Q1 is concerned. There's expected to be a recovery in Q2. How certain is that recovery is what I'd want to know. What the full impact will be, will it completely come only in Q3, and therefore will Q2 numbers also remain slightly on the subdued side, is the other piece I'd want to know. So those two things is the first part of what I want to know. When does that recovery come through? The second piece is with regard to the execution run rate for full year FY26. What does that look like? Because the order book is tall, so there's no concern where the order book is the case, but it's only about execution ramp up. So that's what you want to really look for, and therefore how will FY26 numbers look like, and versus the consensus, how do they look like, and what the risk to the delay in delivery will be. They have seen some of those translate in the past, where deliveries are which were supposed to happen did not happen for a multitude of reasons, and now is there any risk with regard to FY26 and FY27? So those are the two pieces. The third piece is the split between passenger and freight. Now there's going to be a big shift. They've been doing freight for a fairly long period of time, and freight is roughly 90% as of FY24 financials, 89%. Passenger was just 11% back then. FY25 actually things got even worse, where freight was a larger piece of the pie and passenger was even smaller. But margins in the passenger side went up quite substantially in FY25. That is expected to likely continue to improve, along with the skew towards passenger going up as well. In fact, the order book breakup as well now has a larger portion of passenger, a lesser portion of freight. So I'd want to know both of these angles. Does passenger now start commanding a higher share very, very quickly? Is that what the ground reality is? And what the margins will therefore look like in passenger versus freight, right? Now, the fourth piece is with regard to the Mumbai Metro Line 5. There has been some chatter that they are L1 bidders to Mumbai Metro Line 5. I want to know what the visibility is like. When do we get that full visibility, whether they've won it or not? And what will it bring to the table in terms of value? Around 2,500 crore is what the number seems to be hovering around. When does execution for that also happen? Because that takes the order book substantially higher, adds another 10% to the cumulative order book, including the order book of JVs. So that's quite substantial, and 20% to the current standalone order book. So that's quite substantial. And the sixth piece being the export business. Now, the domestic business of a Titagard Rail faces plenty of pressure, especially from a cash flow perspective, because largely government orders is what they service, and therefore cash flow is back-ended. So it takes some time to translate. Export, on the other hand, is slightly different. It's a better business, it's got better margins, but it's less than 1% of the total business of Titagard. Is that going to be a new area which they focus on, and whether there is visibility on that, or just that there is no bandwidth to take on export business? So some of those angles I'd want to explore when it comes to a Titagard Rail. But let's start off with what the company does and give you a perspective on an absolute basic perspective on what it does. One, it designs and manufactures rail and metro systems, wagons, as well as ships, even though shipping is frankly very, very small component, so I've virtually left it out of the product mix. The largest wagon maker in the country, it's got around a 25% market share. It's the only Indian private firm making both freight as well as passenger train wagons, and also active in shipbuilding, defense and bridges, which is now a separate subsidiary, frankly. Let's talk about products, and I'll focus on the main ones alone. Freight rail systems, which is the major revenue, it comprises of wagons for carrying goods, boxes, tanks, flats, etc. Right? It comprises of components, wheels, bogies, couplers, brake systems, loco shells, etc. And then you have customers. Who are the customers? The Indian Railways, private firms and defense, but predominantly the Indian Railways. That's where a large part or the large chunk of the revenue comes from. Private firms is increasing, and there is a larger focus there as well. So private firms, export, better margins, better cash flow, all of that translates. Let me talk about passenger now. Metro coaches, urban city trains, semi-high speed trains like the Vande Bharat, sleeper trains for long distance, and then you have propulsion and electronic systems, motors, converters, control systems, which is the core of the train. All of that is getting covered at this point by a Titagard. The order book size is roughly 26,000 crore. 38% of that is freight, 62% is passenger, with a rapid shift towards passenger in terms of execution expected. Let's break down the order book as well. There you go, that 26,000 crore order book, largely coming in on a standalone basis, 12,500 odd crore approximately, and 13,500 coming from the JV side of things. So that's how you're adding up to roughly 26,000 crore in terms of order book. JVs are with the likes of a BHEL, my apologies, and an RK Forgings. Yeah. So both of those JVs is what they have. So that's broadly the take with regard to the business, I believe. And we'll speak with Mr. Umesh Chaudhary, the Vice Chairman and Managing Director at Titagard Rail, in just a bit to get a perspective on some of the questions we have. But Anushi, we'll start off with the metrics as we always do. We'll start off with income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of those angles. We'll start with Anushi.
Income statement as usual. So yeah, right now if you look at the revenue CAGR growth, FY25 was an outlier in terms of where the performance was concerned. In the last 2-3 quarters, we did see an impact of the wheel set availability impacting the freight revenue, which is a bigger contributor of the business. Hence, in terms of growth, what we are seeing is around flattish growth in FY25. But if we take the long-term picture in view, that's the 3-year CAGR rate, that comes up to 38%, and that's what translates in the EBITDA front as well. We are looking at a 38% of a CAGR in terms of where the EBITDA is also, and this is with margins mainly remaining in the likes of 11 to 12%. In just FY23, they clocked in about 9% of margins or so. Net profit also at FY25 stood at 275 crores, light bit of dip that we're looking from the FY24 levels. Quickly walk through the Q1 numbers as well, since that was just what had come yesterday. In terms of how the revenue fared up, that was 25% of dip that we'd seen in the quarter. Again, this is on the back of the impact that we'd seen in the freight rail segment. But the management now expects this to to normalize from the second quarter onwards, and that would be something that we should be addressing with the management as well. Margins more or less stood at 9.4% as compared to 10.7%, and net profit stood at 31 crore or 50% of a dip that we are looking in terms of where the net profit is concerned. So Harsh, this is the overall trend that we are seeing in terms of the income statement.
So Anushi, we were also talking about the Italian business of Titagard, and they've provided for that Italian business. Give viewers some color on that as well. Maybe.
Okay, so what the company has said is like currently they have a carrying value of around 112 crore or so, and other receivables of around 61 crore. This is as of the June 25 that we are looking at. There is projected impairment loss as far as where that is concerned, but outcome still awaited on this front. So currently, while in this quarter the impact is not determinable, it is something that we should be watching out for, right?
Absolutely. So they're saying that they're fully provided for this. So unlikely that there'll be an impact going forward with regard to this business. But so that's possibly a positive, some overhang going away. But let me talk about the balance sheet now. When you're looking at equity plus reserves, around 2,500 crores where that number stands. It trades at around 4.5 times price to book. When you're looking at the borrowing number, it spiked up. We've seen an inch up with regard to the borrowing, but you have enough cash and bank balance to take care of that. So the net debt is virtually near zero, which is a positive again. So no concerns with regard to where the balance sheet is concerned. It's a clean balance sheet. Anushi, cash flow.
Cash flows, if we are looking at in FY25, we are looking at a negative figure in comparison with FY23 and 24 stood at a little bit of stretch in terms of where the payables are also concerned, which has led to this number that we are seeing. In fact, if you look at the net cash flows, that stood at 304 crore. This is also in the negative that we are seeing. So hence for that, we have given a thumbs down for this particular rating.
Well, Anushi, give us some perspective. These receivables continuously going up. Is that just the nature of the business? You track this space closely, so you have a great understanding of how these businesses work. Is that the nature of the business? Should we continue to expect that? Because this negative 450 crore of working capital is what's really hurting the business overall, right? Some of that because you have some of it sitting in inventory or still to be completed inventory. And some of it also because of receivables. Is that the nature of the business, or will we see an unwind on this?
So what we are seeing in terms of receivables, while FY24 was a bigger stretch in terms of where the receivables were concerned as compared to FY25, but with infra companies and railway businesses, we have seen that some bit of pressure coming in terms of where the receivable numbers are concerned. The question would be whether it's from the government side, if we are looking at in terms of this number, some bit of pressure that is coming, and we should be addressing this with the management as well in terms of how the cash flow picture is going to shape up going forward.
Perfect. So let's do that. Return ratios, and when you're looking at the return ratios, they didn't look as positive till maybe 2 to 3 years back, but FY23, FY24, FY25 seen very, very robust ROC numbers. 18, 25, 17, very, very strong. And yes, there will be more capex which will get done. Around 600 crore if I've read correctly. A lot of that will be internal accruals as well. You want to talk a little bit about capex? You have a better picture.
In terms of where the capex is, the company has plans in terms of where the FY26, 27 is concerned, and this is mainly for the passenger rail that we are looking at. The company in fact had a fundraise also just couple of months back. So of course they have stronger capex plans in terms of the current land acquisition plans also they have made. They're adding new verticals which would be accretive from FY27 onwards. So that is also something that we should be watching out for. But I'll walk through the shareholding pattern now. Now in terms of where the promoter holding is concerned, 47.8% was the stake that we had seen in March 23, which eventually came down to about 41% in June 2025. In FIIs and DIIs also we are looking at a change in terms of where the mix is, where in last 2 years DII's stake has gone upwards from 6% to 11% or so, while FII's shareholding has increased from 6% to 9.49%. But in March 25 to June 25, we've seen a dip in terms of both of these numbers which are concerned. Public holding now up till 38% is what we are looking at. So on the basis of that, we've given this one a neutral rating.
Yes, and the other piece with regard to shareholding is the number of shareholders. We track that closely only from a perspective, viewers, that you want to see whether there is a substantial ballooning of shareholders in terms of number, and which means that retail participation has substantially gone up in terms of fragmentation of participation, and that has happened where the shareholding pattern is concerned. So you want to keep that in mind as well while you are determining shareholding pattern. We've given this one a neutral with regard to where the shareholding is concerned. Let's talk about the street cred now. 1 month the stock price is down roughly 13% odd. Of course, the stock has moved today, so not factoring that. 6 months down 4, year to date down 26, 1 year down 41. So across the board you are seeing pressure. Stock is down 50% from its all-time highs, or near round about 50%. 5 years though, the stock has been a multi bagger, so clearly giving very solid returns to shareholders, and therefore we've given this one, street cred, a neutral as well. Let's talk about valuations, Anushi.
In terms of valuations now, we've compared it with the likes of Chipter Wagons and Texmaco Rail. And what we are seeing is majorly, if you are looking at current PE, Titagard around 39 times, Chipter also similar kind of valuations that we are looking at. But in 1 year and 2 year perspective, if we are seeing this coming down to 28 times if you are looking at the 1 year forward PE, and then eventually even moving down to the likes of 22 times. And I'm assuming that this is on the basis of higher deliveries that are expected for the passenger rail system, more capacity additions that is happening in the foundry business as well, even in the wheels business that the company is making. So it is interesting to see how that one plays out, right?
Well, yes, you have 27,000 crore order book, not small by any standard, and therefore as that execution ramps up, you will likely see the earnings multiple compress and compress sharply. That's what's visible on your screen as well, and that will continue to happen. Let's talk about what analysts are suggesting on this one. 8 buy calls, no holds, no sells, with a return potential of more than 30% even after what the stock has done today. So strong in terms of street coverage, no complaints there. In terms of the overall rating, let's stack it all up, and that's on your screen now. You've got cash flow may be a bit of a concern, and we'll address that, but otherwise it looks overall either a thumbs up or a neutral, gets us a 5.5 out of 8 on our KYC ratings. Let's go across. We have Umesh Chaudhary joining us, Vice Chairman and Managing Director at Titagard Rail Systems. Sir, welcome. Great having you. I'm Harsh. With me is Anushi. Sir, let me first start off by understanding from you what's happening with regard to the ramp up on the wheel side of things, because that's dragging your overall numbers. What's the perspective? Q2 midway, what's the view? Is Q2 going to be that quarter where we're going to see a bump up, or the full throttle push with regard to execution will only happen Q3? Give us that perspective.
So good morning, and thank you for having me with you. I was very interestingly watching the analysis which was presented, and I must compliment, it was quite a thorough one. Coming to the wheel set issue, the problems that we faced in the previous quarters, and to some extent in the earlier quarter as well, was solely on account of non-availability of wheel set from Rail Wheel Factory, which is the undertaking of the Ministry of Railways. They had certain production challenges, and as we have written in our press note and also in our analyst call yesterday, investor call yesterday, that over the last 2-3 weeks we've seen the problem of the wheel sets having gotten resolved. So I would say that end of July onwards, or beginning of August onwards, this problem seems to be a thing of the past. As far as our other production facilities, order book, everything is in place. So the only thing as far as the freight rail segment is concerned, the only hold up that we were facing was availability or lack of it for wheel sets, which is now resolved.
In terms of freight rail segment that you mentioned that these issues are now being resolved. So in FY25 we had seen an impact of this in the last 2 quarters or so, even in Q1 this playing out. So considering the flattish growth that we saw in FY25, what is the kind of picture that you have in mind for FY26? And also with passenger rail now in consideration, there is expectation of margin upticks in terms of how FY26 would be as well. So if you can give us a color on both of these fronts.
Absolutely. So, as we have also given in our press note along with our results, we are confident of being able to make up the lost production of the Q1 in the balance 3 quarters. And we have given a guidance that the overall quantity of wagons that we are likely to deliver in the current financial year is going to be similar to what we have done in the last financial year. On an overall basis, now we have a capacity of doing between 1,000 to 1,200 wagons. But considering the overall market demand, the order book and all of that, we expect that ballpark of 900, so plus minus 50, 100 wagons here or there on a monthly basis is what we are wanting to or expecting to deliver over the period of time to come. Of course, as we have announced, the orders that we have as on this date is about 10,500 wagons, but there are new private sector tender pipelines or inquiry pipelines that have built up, and we are expecting the railways also to come up with their requirements either by the end of this financial year or thereabouts.
Got it, sir. Sir, talk to us a little bit also about the unwind on the cash flow side of things. There's plenty of cash blocked in working capital at the end of FY25 as I can see it. Is that starting to unwind Q1? When should that unwind happen? So therefore, will FY26 be a year where you'll have a large cash surplus coming through?
So we have 2 business segments and both have to be seen separately. As far as the working capital cash requirement is concerned, the overall working capital cycle of the freight business is much shorter. The cash blockage happened in the last year primarily because the wheel set problem, which was more of an unexpected issue, happened over the last 2 quarters, or actually in the end of the third quarter and in the fourth quarter in terms of the FRS. And all our other production and inventory and everything was planned with full availability of wheel sets. So that was primarily the reason. Otherwise, if you see the earlier years, FY24, etc., the cash flow was positive. The operating free cash flow was positive. But we are confident of being able to bring back the overall cash need, the working capital cycle in the FRS to around 30 days cycle, which is what the ideal working capital cycle should be for the freight business. When it comes to the passenger, this is another story, and that is, we in the passenger rail segment, we have 3 SBUs. Which we have announced in our press note. One is the Metro SBU, one is the Vande Bharat, and one is the propulsion and electrical. The overall cash requirement, working capital cycle in this business is about 75 to 100 days. And therefore, the working capital requirement will be higher. But also when we are in the ramp-up phase, we have to make sure that there is adequate inventory because there can be slip up somewhere or the other. So that is not the key consideration to maintain the ideal working capital number of days at the ramp up phase of the company. But going forward, maybe in FY27, we will be able to come to that 75 days working capital cycle for the passenger rail system as well. So in short, FRS, we should be able to get to the 30-day working capital cycle this year. And in the PRS, 75 to 90-day working capital cycle in the next year.
Just more emphasis on passenger rail segment. Just want to understand from FY27 onwards, is there a shift expected in terms of whether freight rail and passenger rail is concerned? Because freight rail is currently a larger contributor, but now with the Vande Bharat prototypes, deliveries expected, more metro rail order wins also that you've declared, even the delays in terms of whether Bangalore Metro was concerned now easing off. How would the picture be for this particular segment? Because it's expected to be a pivotal driver for you going forward.
Absolutely. That's a very interesting question. And, I think it's very reflective in the nature of the order book that we have. I've always mentioned that the wagon business is at a cruising altitude. It is almost like I would say, annuity business now for us, because we've already got, even our foundry capacity expansion is now completed. We will be on line with production within this and the next quarter. So we'll be integrated in terms of the wagon to be able to produce between 900 to 1,000 wagons a month, subject to the ordering from the railways, of course. We have a kind of a very big change of volumes going forward. But passenger rail system is a completely different story altogether. So out of a total order book of 26,000 crore, including our share of the JV, only 4,000 crore is the freight rail system, and the balance is all the others. Now, this is this signifies a huge shift in the overall company's fortunes going forward, where freight, which used to be 95% of our revenue and of our order book, is now, in terms of order book, only 4,000 out of 26,000 crore. So that kind of signifies the kind of growth trajectory that the passenger rail system is going to offer, and how strategic that is going to be for the company in years to come.
All right. Thank you so much, Mr. Chaudhary. Unfortunately, all the time we have, would have loved to push this discussion more, further and try and get a better perspective. But sorry, sir, that's all the time we have on this edition of KYC. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह, क्या बात है, क्या बात है। जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम, एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
Markets trade in the green, Nifty above 24,500. Sensex also gains more than 200 points. Most sectors trade with gains. Meanwhile, the Finance Minister introduces a bill in the Lok Sabha to amend the Insolvency and Bankruptcy Code 2016. The bill has been referred to a select committee which will make a report by the first day of the winter session of the Parliament. And Apollo Hospitals as well as Nykaa buzz in trade. Apollo Hospitals reports a good set of numbers. Profit surges over 40%. Nykaa's profit too soars in the first quarter. Margins expand. And finally then, in a big boost to Paytm, RBI grants in principle nod for payment aggregator license. Stock up over 5% in trade. Good afternoon. You're watching Markets at 12 with me, Shriyansi Singh. First things first, let's take a look at the markets. In fact, it's looking like a decent day in trade at this point in time. When you take a look at the Nifty, managing to hold up above that 24,500 level. And when you take a look at the sectoral picture as well, even that is looking very sharply tilted in the favor of green, because you do have defense, metal, auto, pharma, as well as consumption leading the gains. On the flip side, there's FMCG, PSU Bank, IT, as well as oil and gas that are lagging behind in trade. But with that in mind, when you take a look at some of the top gainers, you have an Apollo Hospitals that's managing to eke out a gain of about 6% thereabout. Hindalco gaining 4.5% as well. Hero Motorcorp, Eternal, HDFC Life, as well as Tata Motors and ONGC are some of your gainers from within the Nifty 50 pack. And on the flip side, there's an IndusInd Bank, ITC, Wipro, HCL Tech, Axis Bank and Titan on the flip side that is on the back foot as we speak. So that's largely what the picture is looking like as far as some of those stocks are concerned. But tell you what, the Insolvency and Bankruptcy Code Amendment Bill 2025 is something that we should also be looking at, because that's the one that proposes several sweeping changes to streamline the insolvency resolution process, also improve clarity for stakeholders and enhance asset value recovery. In fact, Shrimi is joining in with all of those important details there.
Yeah, so clearly, actually, 5 big amendments in the proposed IBC bill introduced by Finance Minister Nirmala Sitharaman on Tuesday, and I will take you through to the 5 important amendment in the IBC bill, which will be taken up possibly in the next, parliamentary session, that is winter session. So first up is that this IBC bill is empowering, clearly empowering committee of creditors. So two important amendments this bill is proposing. One is that it introduces the flexibility for out-of-court settlement led by the corporate debtor under COC oversight is something which reduced lot of litigations and will do a lot of out-of-court settlement, and this also empowers COC clearly to play a more proactive role in the resolving all the asset stress and the issues in the resolution process. The second important power with COC being given in the IBC bill is that now COC of a holding company can enforce guarantee given by its subsidiary companies. So far at present, there is no such provision where a COC of a holding company can actually have access to the assets of the subsidiary company, but here the bill is proposing that, and this also means that they can have access to all the guarantees given by both corporates and personal guarantors that will come under their purview. And in fact, this will clearly eases and streamline the entire resolution process for corporate and entities. And in fact, it will become a more attractive for the potential bidder as because whomsoever is interested in the main holding company would like to also have assets of the subsidiary company, for example, land, etc. So that will become a more attractive bid for anybody, any potential bidder in that interested in that insolvent company. The third important is that shifting the CCI approval after COC, actually voting on that resolution plan. So far, all the potential applicants supposed to take CCI approval on a resolution plan before the credit of committee approval. But what IBC is saying now that you can actually go forward with the COC approval first, and then perhaps you take a CCI, Competition Commission of India approval, and that is saving a lot of time for all the bidders, because now only a successful bidder actually will need CCI approval on the resolution plan. Now, fourth important on the clarification on the secured creditor. Now, this is also has been a very pain point in the whole resolution process. What happened here is that only creditor with contractual security interest will be treated as secured creditor. So far, any statutory creditor, for example, tax department, VAT department, any state department used to have, used to give that we should be also giving priority in terms of securing that asset in the resolution process. But what IBC proposing here is that you need to have a contractual agreement and the arrangement with the debtor to secure that, rights on that asset resolution is something will clear the lot of confusion and ambiguity in the whole process. The fifth and important here again is the mandatory admission by the NCLT. Now, the NCLT IBC proposing that it must admit the insolvency application if a default is established. So far, what is happening here is that NCLT has a lot of underlying condition to actually admit any insolvency, cases, and that was delaying the whole resolution process. So what the bill is proposing that if you need to just see whether the default is there or not and just admit the case. So clearly, it's also kind of reducing the discretionary power of NCLT, but on the flip side, it will, also reduce the whole timeline of the resolution process. So this is what the 5 key takeaways of the amendment is what I see.
Well, absolutely. Thanks, Shrimi, for joining us with all of those important updates. So not 1, not 2, but 5 big changes that Shrimi's just talked about. In fact, let's take that conversation forward and get experts on board, discuss this with them as well, because we do have Sonam Chandwani, who's the managing partner at KS Legal and Associates, joining us, as well as Kumar Saurabh Singh, partner at Khaitan and Company. Thank you so much for taking time out this afternoon and helping us out with this. First things first, Sonam, I wanted to come to you and I wanted your take on this as well. Do these amendments, according to you, signal a shift towards a more creditor-driven insolvency regime? What do you make of this then?
Yeah, I mean, it clearly strengthens the lower role of creditors in insolvency proceedings. So it allows creditors to, start resolution process outside court and gives the COC authority to replace liquidators or, also pursue group assets. So this definitely reduces delays, which currently average around 434 days for case admission. And also it ensures faster recoveries. While this empowers banks and financial institutions, it may also limit the influencers of smaller stakeholders. So this amendment definitely aligns with India's insolvency framework with global standards, enhancing efficiency and greater confidence overall.
Saurav, I would like to come to you, Shrimi, here. I wanted to ask that this corporate-led resolution framework, which is the part of the proposed bill, do you think that it involves a risk in terms of it's taking you towards pre-IBC, culture, the informal culture, and that will also lead to prolonged restructuring? What's your take on that?
So, Shriram, I think corporate-led resolution is something which is now being introduced after experience of last 10 years. So now if you see in last 10 years, IBC has built very robust framework for strengthening the hands of the creditors. But what we have also seen in the process is that sometimes the initial opportunity not being available with the company can lead to actually deterioration in value of the assets, and therefore effort to revive the company through a framework which is having blessing under the code will really give a balanced framework to the code, really, where the first shot at resolution is allowed to the incumbent. But if that doesn't work out, then the creditor-led process takes shape. And if you see, even from more experienced jurisdictions also, the opportunity given to incumbent is not shunned upon. But in our case, if you see, that framework was largely coming from RBI frameworks, did not have wider recognition in the court. So I don't see it negatively. It's only trying to create balance in a time-bound manner. And if it doesn't work, then surely creditors can take charge and run the resolution process thereafter.
Sonam, I would like to come to you as the bill, clearly say, indicating towards that it's limiting the power of NCLT. Do you think that it will, help fast track the whole resolution process? And because now what the bill is suggesting that you have to just establish whether default is there or not and admit the case. So do you think that it will change the whole IBC process and reduce the timelines?
Yeah, it definitely will. Of course, so by mandating NCLT to admit applications within 14 days upon proof of default will definitely push the timelines. It is also supported by objective evidence like information utility records. The amendment also eliminates subjective grounds for rejection that currently prolong admissions to an average of 434 days. So this also ensures, swift initiation of proceedings, preserving asset value, and also elevating the strain on overburdened tribunals. So it may also argue that, this curbs judicial flexibility to filter frivolous claims. The clarity and speed it introduces far outweigh such concerns, fostering predictability for creditors. The reform also aligns with the IBC's core objective of time-bound resolution, reinforcing India's position as creditor-friendly jurisdiction. So this change for enhancing efficiency while urging robust safeguards to prevent misuse will definitely, push the timelines.
Mm-hmm. Mm-hmm. But sort of on the part of the whole which department to get actually priority on the assets, the whole clarification which impacting the ongoing, how they are going to impact the ongoing litigation in that case, how those will be get affected. For example, tax department has certain say in that asset, and then of course the financial creditor, the difference between operational creditor and the secure creditor as clearly attempted to be defined in the bill. So how that is going to impact, don't you think that then tax department and other department or statutory department will take a back seat?
I think the amendments were imminently required. If you see last 2-3 years, the number of litigations that has happened from tax and other government departments, I think that is taking us little bit away from the whole objective of insolvency, which was the creditor in control and creditor driven process, where the financial creditors who have really lent for business, they run the resolution process and they have first right of recovery. So you kept the shareholders out of the process, board out of the process, and with a view to enhance recovery for the creditors who have lent for the business. Now, as far as the tax department is concerned, if you see the original scheme of the code, it was really championed as a code where secured creditors are being given priority above all else. It was only through an interpretation which was made by Supreme Court that secured creditors included government claimants also. That was not the original idea. It just required a technical interpretation to bring tax department at par, and that can really affect decision making, because tax department doesn't sit in the COC. Every time a resolution is approved by secured creditors, tax department can have a different view. And when you had come up with a code which puts financial creditors above all else, why dilute it through this kind of technical interpretation? But be that as it may, that happened through a order from court, and now I think this clarification that government dues will come down and the security interest is only contractual security interest is a move in the right direction. I think the Supreme Court judgment was really not helping the entire clarity which was required around resolution process. So tax department clearly is not intended to be a critical stakeholder in decision making in resolution process, and if you put them right at the top, it's very likely that their position will come in conflict and it will lead to more litigation. So this clarity on distribution was much required, and they were from very beginning required to be lower in priority than secured creditors. And I think secured and financial creditors being above then government dues is the stated position with which government had introduced this law, and this clarification really removes the ambiguity which had got introduced through Supreme Court order. So in that sense, it's a very welcome move as far as we see the entire scheme of insolvency resolution.
So out of just a clarity needed, that will that have a bearing on the ongoing cases? And also I wanted to understand that this overhaul in the IBC framework, does that have any impact on the JSW Bhushan Steel matter?
So you see, the clarity, this is still at the bill stage. This proposed changes is at bill stage. It will go to the select committee of parliament and then will come for lawmaking in due course. But these are a lot of amendments that have been introduced are really trying to address say indifferent interpretations which have come from our courts, which tends to happen. I mean, in a system that we have of multiple courts and multiple states having judicial administration looking at situations differently, there is possibility of conflicting interpretations, and I think there was much needed requirement to bring about clarity. In the same spirit, Bhushan Steel also, I mean, while that matter is in Supreme Court and the courts are already addressing the original order which required company to go into liquidation, but I think this issue also gets clarity through the amendments proposed, that if provisions of the plan is not in compliance with law, NCLT should send the matter back to COC to reconsider and get the issues addressed, rather than the path which has been taken currently in Bhushan Power and Steel matter to put company into liquidation post approval. I think that may have far-reaching impact, and that we are already seeing how it is playing out in Supreme Court. So I see that the amendments are all very timely and should be very promptly implemented. and some of the issues in Bhushan will also get addressed, and we'll not see future Bhushan steel kind of situations if the law is correctly introduced and implemented by way of amendments which are currently proposed.
We'll see how things will pan out, because now the bill has been referred to select panel committee and they will come out with their own recommendation on that. Thank you so much, Saurav and Sonam and Shanshi, over to you.
Well, absolutely. Thanks, Shrimi. That was quite a detailed look into that particular story. So that's something that you should be keeping on your radar. But tell you what, let's also keep Premier Explosives on our radar, because that's the one where you've seen the first quarter's profit soar on a year-on-year basis. As you can see on your screens as well, the stock, of course, is rejoicing on that particular front. When you take a look at some of the numbers as well, it's a strong revenue growth that you saw coming in on the back of defense and space services. You did have the profitability also being aided by higher other income that has also risen 5 times, lower finance costs, also something that we're looking at. But tell you what, let's take the conversation then forward with TV Chaudhary, who's the MD at the company, and try and understand what the earnings fine print then looks like. Mr. Chaudhary, thank you so much for taking time out and joining us this afternoon. First things first, I wanted to talk about your defense-led revenue growth at this point in time, this quarter. That's something that we've seen that really stands out, right? So in terms of order book also, 87% is now going to be defense. Will this be the main driver of your guided 600 crore rupees FY26 top line? And eventually that 1,000 crore figure also that you've outlined as well?
Yeah, defense and aerospace is going to be the main driver, because we don't find significant growth in the defense, civil explosives and other area. So our main target is achieving through defense and aerospace.
All right, and point taken, Mr. Chaudhary, but tell you what, let's talk about FY25, because you did have liquidated damages charges. Did that impact the margins this term as well? Are your margins, in fact, at 15%? Below that 18 to 20% medium term range, can you give us a little more color when it comes on the margin front then?
Yeah, we are still targeting that by the end of the year, full years.
All right, help us also understand the reason for the margin contraction this quarter.
Yeah, like you said, the LD is there, and still we are discussing with our partner, Elbit, because to share the LD costs. And in the meantime, we are also approaching the government for considering the waiver of LD, considering the geopolitical conditions and all those. And from both sides, we are expecting some response, and then this LD will be taken care of.
All right, then let's talk about your other income as well. Uptick of 5 times that you've seen come in there, lower finance cost, also something that you're looking at. So want to understand a little bit more when it comes to this component, and help us understand about your current debt position as well there.
The higher income is, this is because the one is the LD part in some of the orders where the LD is taken care. And another thing is the delivery is completed, and in the last quarter, these items which are inspected and but not yet delivered, the valuation was taken at a lower side. Now it is taken at full valuation.
Well, yes, absolutely. But let's also talk about the board approving that fundraise. 300 crore rupees is what you're looking at. What is this going to be utilized for then?
See, in the existing plants, mainly this is for enhancement of the capacity, that is RDX and HMX plant, then propellant manufacturing, and also ammunition. These are the areas where we want to further expand to meet the growing demand. The Greenfield project, which is proposed at Odisha, so that also is included in the projects. So altogether, we are expecting around 225 is towards the capital expenditure, and the balance for our other needs, corporate needs.
Well, yes, absolutely. But tell us about your expected mix as well. Take us through that, because in terms of defense versus commercial explosives contribution forward, what are you then outlining there?
The contribution wise, yes, defense is definitely making a good contribution. Commercial explosives, it depends upon the raw material costs. which are fluctuating depending on the imports and then domestic prices. So it is defense, and we are betting on defense and aerospace.
All right, and sir, before we let you go, tell us about the order that you won last quarter, because you did win that order from BrahMos. Can you reiterate the size of that order? What's the status there, and for which other products and companies are giving you orders in this particular segment then?
Yeah, BrahMos, already the activity has started because the hardware and those things have to come from them. We are waiting for them, and once it starts, they want regular supply of that, which we are geared up for. Other areas, like we have executed one production order of Israel, export order of rocket motors, and now new orders have come, which are added to our order book. And further also, in new areas which we are looking at is the ammunition, 40 mm grenade ammunition, where we have participated in the RFP, and then we are expecting success in the RFP. And mines also is another area, that is land mines, which is anti-personnel and anti-armored vehicle and all those. There also we have a strong existence, and then we are expecting the coming year and the future is going, contributions are going to come from these areas.
All right, and thank you so much for taking time out and joining us on the show. So there you have it. That's Premier Explosives. That's one counter that is buzzing away in trade, as you can see on your screens as well. 15.5% thereabout uptick coming in on this particular counter. But that's all the time that we have on the show. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह, क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर जय जवान जय जवान जय हिंद जय हिंद
They're the force behind some of India's most respected business.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Bazaars. I'm Hiral Datia. Let's quickly take a look at what's happening with the markets. Pretty much on a firm footing in today's session because if you see Nifty 50 as well overall, we are around that 24,600 mark, nearly at the day's highest level. So that's that mark we're hovering with. It's healthcare which is actually providing some bit of impetus as well in terms of Nifty 50. Let's also look at what Bank Nifty is doing in trade. And then we'll see the sectoral heat map in terms of what's panning out. Overall, 24,550 is the range that we're tracking, but your Bank Nifty also, which is seeing gains of 0.2%. Let's look at the sectoral heat map and see where those gains are coming from, because individual stocks that have been reacting to the last leg of the earnings have been spectacular. Healthcare, the top gainer today. Defense is seeing buying as well in today's session. Metals is on a firm footing as well on the back of few of the the metal earnings that did come in. Apart from that, auto also pretty much on a firm footing. What's losing out is with regards to FMCG as a sector, which has been trading weak. PSU Bank Index is also trading weak in trade today. And if you talk about Nifty IT, which is seeing profit booking. So whether this is a time to buy IT or not is something that you will get an answer on NDTV Profit as well on the back of the exclusive story that we've done. But categorically, let's pull up the broader markets and see what the mid-cap and the small-cap index are also doing in trade. And then we'll look at individual stocks. Nifty mid-cap also seeing gains of around 0.5%. And you have the Nifty small-cap 250, which is up around 0.4%. In terms of individual names, let's look at the heat map of Nifty 50 and see where the gains are coming from and what's losing out in trade today. And in terms of the top gainer as well, you have Apollo Hospitals. That's a strong one on the back of a strong set of numbers that have been reported. Cipla is pretty much on a firm footing as well. Eternal trading in the positive. Hindustan Bank is trading slightly with pressure, Titan down, ITC down as well. So that's what the heat map is looking like. If you talk about broader markets as well in terms of individual names, You have NMDC Steel and NMDC. Both of these counters are seeing some strong gains on the back of the numbers that have been reported. JM Financial is on a strong footing today. Oren Pro is another one which is seeing some strong moves, as well as you have a Honasa, which is up almost 7 to 8% on the back of that CLSA note. What's losing out? Reflex is down around 7% in trade. Aarti Pharma is trading under pressure. Coromandel International is trading under pressure. Oil India is under pressure, as well as the Surya Roshni, which is down in trade. So that's with regards to the markets. However, equity investments do continue to be the best option, says Purinju Veliad, founder and CEO of Equity Intelligence. In fact, he emphasizes the abundance of quality stocks and IPOs that should be in focus. Let's quickly listen into a bite of that conversation.
There will be intense competition in every field of business. And India is, now India has been watching the number of new segment, new business areas, the new listings of those companies. So there is a huge supply of high quality stocks coming to the market already. It will continue to be so for the next many years. It's all very, very different kind of businesses, what you see. So the names what you told are some of those in the recent past, and there are many more coming. So I think that new businesses are coming to the market. It's very exciting again for investors to look at those new companies coming up, new companies planning IPO. But very good companies in IPO. I never apply in the IPOs because if it's a very good company, you don't get the shares, and if it's a bad company, you get the shares and price goes down. So IPO has never excited me, but you have to watch those IPO companies. Maybe you can do something later in the markets.
So that's the word coming in from Purinju. But let's quickly pull up our Indiqube on the screens and see what the counter is doing in trade. Almost a 30% uptick in terms of revenues as well as the EBITDA. Though the net loss has reduced at 36 crores versus a loss of 42 crores. The stock did see a spike in terms of opening trade, but that counter has cooled off. You're talking about the renovated portfolio, which is at 29% of the AUM. The lock-in with landlords is at around 10 to 20 years, and the average client lock-in is 37 months for the company. Joining us is Rishi Das, co-founder and CEO of Indiqube. Rishi, good afternoon and welcome to the show, and a pleasure to speak to you. A good uptick in terms of the revenues. The margins have improved as well. Losses have narrowed this time around. When do we see the company in the black with the profit number?
So if you look at the IGAP equivalent, we are already in the black. We have been paying income tax for the last 3 years. And if you see this time, like our PAT has been almost 18.5 crores for the current quarter. So what you see as losses is more on the accounting standard, the way India's calculations are. Yeah.
Okay, so I still quite didn't get you. So when does your balance sheet reflect a profit number then? Because accounting standards is one thing, and I think everyone follows that. But from a business perspective, do you think FY26 then will be a profit number?
So it's very difficult, honestly, to comment on that. But if you look at our EBITDA growth has been very, very healthy. We are already at 21% EBITDA margin as far as IGAP equivalent numbers, and revenue has shown a good growth. PAT also has become 3 times as per the IGAP equivalent numbers. So I think if you look at from a balance sheet point of view, what is happening is because our business takes a lot of properties on long leases. So there is a right of use capitalization that happens of all these assets, and then they are amortized. So there is an impact of that, and that will continue for some time, because as we are growing, that number will reduce over maybe the next 2 or 3 years. So I think the right metric that we have been asking people to look at is that we have been paying taxes, we are PAT positive, we are still A+ rated. So yeah.
Okay, 1 second, Rishi, just correct me if you're wrong, if I'm wrong. You're saying you're PAT positive. What's the PAT number?
Yes. So PAT number for the this Q1 FY26 is 18.5 crores for this current quarter.
Okay, but your release says it's a loss of 36 or 37 odd crores. So what is that number?
So that is what I'm highlighting. That what you see as loss is on account of accounting standard. If you see, we have paid income tax in the quarter, and we have we are pretty much, very much on track as far as PAT is concerned. So the loss that you see is because of the accounting standard issue, where typically all the leases are like, suppose if I have a 20-year lease, you capitalize the lease. And then you take a right of use of those leases. So the impact that you take of those leases is much higher than what your actual rental payouts are there to the basically the landlords in our case. So yeah, so any business which has a large portfolio which is leased assets will have that challenge, and very similar is our situation. Yeah.
Hello, Mr. Das. It's Puneet joining in as well. Thanks so much for joining our show. Just a question. Let me just take forward the profitability point to cash EBIT as well. We've seen a sustained, decent level of cash EBIT being generated in this particular quarter. What is any kind of range that you can give us for what could be the expectations for FY26 in terms of cash EBIT generation?
So we will be, Puneet, we will be range bound. Like as you can see, like our cash EBIT is 48 crores and registered cash EBIT is 52 crores. So we see that this trend will continue to grow. And if you look at compared to last year, there has been a very healthy increase in the cash EBIT as well. So very similarly, over the next 3-4 quarters, we see year on year a very similar kind of trend we should be able to maintain as far as cash EBIT is concerned.
Okay. Rishi, very quickly, beyond the physical workspace, the revenue contribution from value-added services like facility management, F&B, IT support, and what is going to be the strategy to grow this segment? How much does it contribute now? And is there a strategy on that front?
Yeah, so this constitutes about close to, I will say 11 to 12% of our revenue. And there has been an upward trend on the value-added services revenue, because what is happening as customers are coming in, they are liking us, they are willing to take more from us. So for example, if you see food, transport, design and build, multiple services we are offering to our client. So as a percentage of our revenue, we see the value-added services will continue to have a very healthy trend and an upward trend. And if you see year on year compared to last year, we have had a healthy growth rate on our recurring revenue from the value-added services as well. Yeah.
And Mr. Das, just one question in terms of the leases as well, because you have a long lease with your landlords. Currently, I think the occupancy similar to industry for you is roughly between 33 to 36 months. Specifically, how do you view that aspect going forward? And in terms of occupancy, how would that aspect? Because your top 10 client concentration is also above 60%. So what is the current conversation that you're having with new clients in terms of diversification, as well as how long do you see that occupancy rate being around the current number that you're maintaining, I think, for FY26?
So I will just correct, the top 5 clients constitute less than 15% of our revenue. Right. So I'm not sure, like when you are saying that top 10 clients contribute 60%, I think there is some correction there. The top 5 client concentration is about 15%, and that has been reducing in the last 3 years over here. And if you look at on the lease front, what we typically have is most of our landlord leases are between 10 and 20 years. So what that means is that the landlords cannot ask us to go for the entire tenure. They are logged in for the entire tenure. Whereas our lock-in with the landlord is for a period of 3 years, typically 36 to 40 months. That is a tenure we have. Now, very similarly, we have lock-in with our clients as well. So from that point of view, if you look at clients which are typically taken more than 300 seats, which constitute about 60-65% of the area that we have, our lock-in commitment with those clients are also 3 years. So as a result, typically we are locked in on both sides. When we are giving commitment to our landlords for 3 years, we also have a corresponding lock-in commitment from our clients. So we are able to maintain a healthy balance, and that is exactly what helped us keep afloat during the COVID times.
So Mr. Das, you're mentioning that the large client will be roughly between currently the top 5, as you mentioned, is roughly between 10 and 15%, and specifically the large enterprises will be around 60-64%. Do you expect that to continue going forward as well, given the way the industry works?
Yeah, so basically the cut that I can provide you is that 40% of our clients are global capability centers. Typically 60% are Indian enterprises. And within the Indian enterprises, we have the good mix of companies like Narayan Hridyalaya or multiple Tata Ventures are there with us. So they constitute a good percentage of the 60%. And we have a lot of late stage startups like Walmart, Myntra, or companies like No Broker, or companies like typically Upgrade kind of companies have taken space. And then we have the Indian IT services companies. And most of our Indian IT services companies are typically the mid caps. We are not very concentrated on the large caps typically over there. So that way the client mix has been quite diverse, and this has been changing. Like if you see when COVID was happening, we had a very large percentage of startups and IT guys in our portfolio. Now we are seeing a lot more of GCCs and the Indian enterprises constituting a good percentage of our portfolio. So that way India is quite a diverse market, and if something is not going well, the other thing is taking care of that. Yeah, that's how we have seen it.
Got it. So that's with regards to Indiqube. Thank you, Rishi, so much for joining us on the show. The stock is up nearly 7.5% in the last 5 trading sessions. And it has been a recent listing as well, so not much data is available in terms of the past performance. So that's with regards to Indiqube. But moving on, Nykaa, that's another stock to focus on as well in terms of today's session. Overall, a strong quarter that the company has delivered, and this is beating industry growth in both beauty as well as the fashion segment. A lot of factors that have improved for the company, and Mahima is with us in the studio to tell us what has worked. Mahima, a strong set of numbers, profitability has improved, and a lot of other metrics which have worked for them this time around. And I think it's a day for new age companies because you have a Paytm also which is seeing a turnaround. For a Nykaa, what can you tell us which has worked, and what is the sustainability looking like?
Right. So, overall, as you mentioned, it's even the operational front things are looking very nice. Numbers were largely in line. Both beauty and fashion vertical are largely growing beyond the industry growth, and profitability is continuing to improve for them. So that is a positive sign. Plus, the management has gone ahead and said that fashion business will turn EBITDA positive by the end of FY26. Margin expansion was definitely, surprising. So that's something that they are working on. Then they've said that they'll focus both on growth as well as the profitability. Nykaa now is also expanding its footprint and doing very well for the company. Overall, in terms of numbers, revenue was up 23%, EBITDA up 46%. Overall net profit up almost 142%, and margins improved to around 6.5%. That's up almost 100 basis points. In terms of the operational metrics for different segments for Nykaa, beauty segment overall gross merchandise value saw a growth of 26%, and customer base also increased by 29%. Fashion segment grew by 25%. The multi-brand retail outlets that they have, they've seen a growth of 36% in terms of the retail space, and profitable stores are now growing at a pace of 33% year-on-year basis. The House of Nykaa has also seen a growth of around 57% in the GMV growth, that is your gross merchandise value growth. Year-on-year basis. The House of Nykaa has also seen a growth of around 57% in the GMV growth, that is your gross merchandise value growth. And lastly, the Superstore that is Nykaa's, even in terms of expansion, they're planning big when it comes to Superstore. But in terms of gross merchandise value, it's climbed 40% YOY, and margins have also expanded by 500 basis points for something like this. So it's overall an interesting quarter for Nykaa per se. And the other one that's been buzzing in the same space, the beauty retail space, is Honasa as well, which is doing well in trade today. And on the back of the numbers, positive on margins, positive surprise on margins, and sequential improvement in EBITDA margins has taken place, and new brands have continued to show good growth in terms of where Honasa stands. And margin guidance they've gone ahead and given it this time, and said 100 to 150 basis points annual improvement in the next 4 to 5 years. So that's with regards to where Honasa stands.
Strong, numbers coming in. I think a lot of women, and I think now men have also ventured into buying beauty products. I think
skincare probably.
Exactly. I think Puneet will want to weigh in on this one. Are you a buyer, Puneet?
I am a buyer, yes, but only of certain products. So I think the premiumization and the margin push will come in a few quarters for these.
Okay. So you're in the premium segment right now, probably.
I'll yes.
So let's see if the same thing happens like real estate for this space as well, now that luxury is crashing. But that's the space you should be watching out for. The other aspect that we're considering today is the Nifty 50 scorecard. Mahima did a fabulous job today, on the show on India Market Open as well, to take us through with how the Nifty 50 companies have actually performed. And clearly, if you talk about the companies, around 16 companies actually delivered numbers which were above estimates. Around 13 companies reported numbers which were below estimates, and around 21 companies from Nifty 50 reported numbers which were pretty much in line with estimates. Let me get in, from the NK Confluence 2025 India Ascending, the next leap, which is day 2 ongoing. Avinash Singh, Deputy Head of Research at MK Global Financial Services. Avinash, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. My first question coming to you is, now that the earnings season is over, you have all the Nifty 50 companies that have reported numbers. Your first view in terms of how the season has been basis MK's estimates.
Yeah, hi. Good afternoon. Thanks for having me on the show. Yeah, so the earnings season has been kind of evenly balanced. I mean, as you highlighted, there was some, companies beating estimates, but you also had certain kind of, I would say, marginal disappointments. Broadly speaking, if you see the kind of the downgrades had not been that alarming, but at the same time, you have limited upgrades. And partly this is also to do with what is happening, a bit of uncertainty around the geopolitics that is weighing on in certain business segments, also in terms of outlook, and perhaps that also a bit weighing on the your earning forecast. So domestic, of course, I mean, we had a bit of, I would say, demand, marginal slowdown in the recent quarters. And today we had a chief economic advisor in our conference. And of course, he attributed partly the demand slowdown to the tight, liquidity and monetary conditions that kind of was there last year. But this year, I mean, in the last 6 odd months, already 100 basis point repo rate cut has happened. The liquidity situation has improved. So probably, I mean, there is enough kind of, you can say that being done from the fiscal and monetary side to, catalyze demand. But of course, I mean, these are a bit turbulent times, particularly the sectors with the external linkages, where we have kind of, this geopolitical and trade tariff uncertainty weighing on. So overall, I mean, a bit of, I would say, a balanced earnings season so far. The larger theme that is kind of now being watched is that overall earnings recovery in H2. I mean, and the optimism is coming out of, a very, very broad thoughts that, monsoon has been doing better. The festive demand expectations are, improving. And of course, there is support on the, the liquidity and monetary side as far as the, the government and the regulator is concerned.
Mr. Singh, a very good afternoon to you. Thanks so much for joining in. It's Puneet this side. Given this backdrop of the Q1 earnings, we've seen some clear winners in the cement space, while there are some sectors like IT, which is very disputed in terms of valuations being favorable, but growth largely being absent. Apart from these, we've seen many sectors also being in focus. With what you've spoken at the conference and the companies that you've had, is the sense similar, and what are some of the key themes that you're looking at in H2? Given what you've heard at the conference on day 2 as well?
Yeah, so I mean, again, as you flagged out, right now it's typically the sectors with the domestic linkages, demand linkages are finding favor, as where you see the cement is one of them. By and large, the cap good and industrial, particularly domestic linkages, continue to sort of do well. H2 should also see some kind of, recovery also coming as far as the growth and asset quality situation is concerned in the non-bank lending, or even for that matter, there could be some minor uptick in overall lending space. I mean, within financials, I mean, if you see the first half was expected to a bit muted, owing to a lot of regulatory resets. Also, some of the regulatory reset is still playing out till H1. So H2 again continuing on that part, there should be kind of a recovery led by the domestic cyclicals, domestic discretionary consumption, as well as a lending space. and some of the non-lending financiers like insurance space, life insurers should start to report better growth in H2.
Okay. Avinash, to add to that, the other aspect that you mentioned about consumption as well and what you heard from the CA, Seki, does that mean that the domestic growth story is intact? And secondly, a lot of your export-oriented sectors would face headwinds on the back of the tariffs, right? So what should that strategy be in terms of building a portfolio, taking the earnings trajectory into consideration for the remainder of the year? Would you advise to focus on domestic-oriented sectors? And if so, which ones would they be? Avinash, are you able to hear me? Okay, so I don't think so Avinash is able to hear us. We'll try getting him back, but very quickly, in terms of the individual sectors as well, the top outperformers have been names like Eternal, where the losses have actually narrowed for a Blinkit and Hyperpure. You have Hindustan Unilever as well, where the numbers have been better than what the street was expecting in terms of the volume growth. L&T is another one which has outperformed because the order flows have remained absolutely robust. Mahindra and Mahindra, strong volumes that they've seen in terms of the SUVs and tractors. Adani Ports as well, the domestic market share has improved further for the company. In terms of underperformance, also a few of the names that have come in is in Axis Bank and Reliance Industries. Avinash, a quick question in terms of what would you advise investors to buy? Domestic-focused companies or export-oriented companies, taking into consideration the tariff uncertainty right now and the way the earnings have panned out in the first quarter? So if you have to club all of this, look at the next 1 year, where would your bets be?
Yeah, so looking overall scenario, I mean, in terms of the risk reward, is still the domestic, domestic stories and even domestic cyclicals are relatively better placed. Of course, as you pointed out, I mean, some of the export or global link names, the valuations have come off and the valuations are turning into favorable zone. But definitely the ride is going to be, particularly the export-linked names, the ride is going to be a bit choppy over the next couple of quarters, because I mean you have this tariff uncertainty playing out, other geopolitical factors, and then also you have certain kind of uncertainty around how the US economy is going to do. So in all this kind of things putting together, relatively, you are better off going on with the domestic names, like the, the cement, domestic financials, and even the healthcare is looking a reasonably good space to be.
Got that, Mr. Singh. Just one final question from my side. Essentially, do you see any particular picks that you might have as of now? Because you were very early callers of some of the key stocks. Anyone that you have on your focus right now?
So I will leave it you with this broader thought on sectors. Perhaps if the stock piece right now, I would not prefer to comment.
Problem. Thank you, Avinash, so much for joining us on the show. Inputs are always valuable. So that is Avinash from the MK Confluence speaking to us at NDTV Profit. But moving on, Paytm Payment Services has received a major regulatory boost with RBI granting it an in-principle approval for a payment aggregator license, resolving a long-standing overhang and unlocking new growth opportunities. Harsh joins us with more. Harsh, how sustainable is this going to be? Because a big boost coming in for a Paytm and all your new age companies which are buzzing in trade today, but a Paytm seeing a turnaround.
Well, yes, so Hiral, regulatorily, if I can use that term, surely sustainable, right? Because we don't often see the RBI coming out and granting an in-principle approval unless they are completely kosher with regard to how things are playing out. So that's obviously a clear positive. In-principle approval to operate as payment aggregator. What does this mean? And mind you, application happened in September of 2024. This in-principle approval largely coincides with the exit of the direct holding that Ant Financial had in Paytm, only the direct holding. So that's probably a coincidence or otherwise, but that's something that you want to keep on your mind. What this approval really unlocks: one, it allows merchants to accept online payments on the Paytm platform, very, very simply put. Currently, that was being done, but via another route. Now, it can happen more directly. Entity to act as a middleman between customers and merchants. That's the broader, that's the broader benefit also which comes through. And you also have the ability to handle payments. Cards, UPI, wallet, all of the like, all of that gets unlocked as well. And then lastly, it reduces the merchant's burden in terms of compliance, KYC and the like. So all of that is a clear positive. And it enables secure and regulated digital transactions. That's basically what the approval means. What it means for Paytm, how does it benefit Paytm? The regulatory overhang recedes, which is a very big positive where Paytm is concerned. Paytm can now onboard new merchants onto its platform digitally. It improves transaction volume, therefore it enables a larger funnel of customers and therefore a larger revenue stream as well. And top line, very, very important to Paytm because it translates to bottom line. The previous application was rejected in 2022, which curbed Paytm from onboarding new merchants digitally. Now all of that goes away. That's the positive. Paytm did not meet FDI compliance requirements the last time around. There was some caution over corporate structure, which was why it was rejected the last time around in 2022. So all of that now hopefully is behind Paytm. Net worth and governance requirements also may not have been up to scratch. It was allowed to serve existing customers. That's how it was doing business earlier, and merchants as well. So that is how from between 2022 and 2024 it was doing its, or 2025 it was doing its business. Offline merchant onboarding had continued back then as well. So that was how it continued to source business. Cross-selling to existing merchants, newer products like loans, syndication, etc. continued to happen, and that's why the business continued. And then there was gateway services which were provided by banks. So they leveraged on banks to do that. Largely otherwise, a positive in terms of the direction. Of course, it's an important inflection point is what Bernstein calls it.
Right, so that's with regards to our Paytm, and an interesting comment coming in from Bernstein as well. Thank you so much, Harsh, for getting us all the details. In fact, let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह, क्या बात है, क्या बात है। जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Welcome back. You're watching Profit Buzzers on NDTV Profit with Puneet and myself, Hiral. Let's quickly look at a Senco Gold. Let's pull up that one on the screens and see what the counter is doing in trade. 1.4% is the kind of up move that you're seeing on the counter. The company has reported numbers as well. Overall, if you see in terms of the margins, double-digit margins is what has aided the bottom line this time around, and the highest margin in PAT in 6 quarters. Let me get in Suvankar Sen, MD and CEO at Senco Gold. Suvankar, good afternoon and welcome to the show. A pleasure to speak to you at NDTV Profit. My first question coming to you is, the operational performance has been strong despite high gold prices. What has worked this time around, and do you think it is sustainable in the coming quarters as well?
So see, this particular quarter, we had Akshay Tritiya and many such auspicious occasions in the many states of the country. So that has been one of the major drivers in which we had our customers, be it the new customers or old loyal customers who came and bought products. And what we have seen is that in this upward gold price movement, the intention and the inclination of the customer to buy gold jewelry or diamond jewelry has remained strong. It is only the ability of the customer to buy whatever amount and quantity of gold or diamond they can buy. So in terms of value, we have seen that there has been a phenomenal growth of upward of 25-30%. We have seen same-store sales growth of 19%. In diamond jewelry, because of the high gold price, people have opted for lower caratage, 14 carat, 18 carat jewelry studded with diamonds. And now, very recently, government has also allowed for 9 carat hallmarking. So that is only going to make the jewelry industry much more flexible to provide more variety and more price points to the consumer. So I think that it is a volume which is taking a hit, but the overall value-wise, we are still seeing a growth. And because of the high gold price, diamond jewelry has grown by almost 40 to 50%, which is a very, very good, I think, a signal that we are getting from the consumer.
Mr. Sen, a very good afternoon to you. Thanks so much for joining, and it's Puneet this side. So essentially, this same-store sales growth, of course, was very strong for you, but compared to your peers as well, you were outperforming them by a margin. So how sustainable do you think, given that the Akshay Tritiya festival is now over the next couple of quarters, how sustainable do you think that the same-store sales growth can be for you?
See, we usually, always guide that a same-store sales growth of 15-16% is a sustainable same-store sales growth. Even from an EBITDA level, though in the particular quarter one, we have clocked an EBITDA of upward of 10%, but our overall long-term guidance to the investor community is that the EBITDA should be in the range of 6.8 to 7.2%. So this is just a Q1, and we have seen that, along with the gold prices being high, we have been able to, charge a little bit of a premium with the designs on the making charge to the consumer with our Bangle Utsav that we had. The diamond jewelry sales have also added to the overall EBITDA numbers because the stud ratio has moved up from around 9.23% to almost close to 11% in this particular quarter. So all these are the good ways in which we have been able to get the higher number, but a sustainable EBITDA will be around 7%, and that is how one has to look in the long run.
Oh, so you're saying margins will be around 7%. So even I think the same quarter previous year, we were at 7.7%. So that's something also which is not sustainable. And you're talking about a 7% number which is sustainable on margins. So tell me, if you have to look at revenue and profitability compounded growth, the street is looking at somewhere in that range of 18% and 25% respectively over FY25 to 28. Is that something which is achievable, or is that something which you would say is not something that Senco would do?
No, I think that, year on year, we have, for the top line, we have aimed for an 18 to 20% growth in terms of revenue. So this continues to remain the focus. And as we look into it, we have finished Q1 with a 30% growth. We are looking at Q2, and we should be doing around 16 to 18% growth in Q2. The main festive season of Q3 is on the way. All the full planning and preparation towards it is all in process. So we are positive that year on year, we should be growing top line at 18 to 20%. And when it comes to the bottom line, there is effort and endeavors to increase the diamond jewelry sales. We are taking a lot of effort on efficiency because with the increase in gold price, it is very important that exactly what design, what product is selling at which store. So we are using a lot of technology, a lot of data analysis to actually identify the kind of design, the kind of weight ranges, all of that, so that the operations are being done in a much more efficient manner. So all the efforts are done. And I think that what the street is expecting on a 20-25% growth year on year on the top line or on the bottom line, it is something that is very much possible.
And it's the same in terms of store openings as well. I think you had almost 10 new store openings in this particular quarter. And previously you did guide for almost 20 stores in FY26. Is that correct?
Yes.
So is there any, in terms of openings within these remaining 10 stores as well, do you think there's a preference towards company owned and operated stores, or would you be more open towards franchise-led stores? And what is the kind of, positive pivot did you get from, because you were of course deploying lesser capital. So would we see that there'll be an increase in franchise-owned stores, at least for this year going forward?
So the intention is that we shall be, trying to open more franchisee rather than company-operated store. And the overall target of 20 store for the financial year still continues to remain. The moment we are closer to the number 20, and there is any, we see that there is a pipeline of 2-3 stores more opening up, we will continuously update our investors and update all of you. But yes, 20 stores with a higher probability of opening more franchisee. That's how we are looking at the whole business.
Okay. So if it's franchisee led, are you saying majority of it is asset light and you're not going to see any major capex that will go into it? What's the strategy on that front?
Correct. With the more franchisee, it is going to be asset light. The return on capitals will be much more positive. So yes, that is how we are looking at the whole thing.
So what's the ROC that you are aiming for, taking an asset light model into consideration from where you are? Where do you see it in the next year or two?
So see, in the last financial year, our ROC was about 9 to 10% because we had raised the QIP. And that is where, the net worth and the investments were looking high. But I think that our aim and endeavor is that over a period of time, we'll take the ROC upwards of 15% to closer to 20%. That's the aim. And that is how one has to look at the business. But yes, it will be in phases. So from 9 to 12, 12 to 14, 15. And that's how we are looking at crossing 15% ROC.
And Mr. Sen, just one last question from my side. You essentially mentioned at the start of the conversation that We've seen the lower grammage and lower tonnage also, jewelry getting sold, and you have some strength in that. We've spoken about that in the past as well compared to peers. Do you think that going forward with the same-store sales growth that you mentioned of about 15%, that will be something that you will see over the next couple of quarters at least, because we've seen the gold prices also rise dramatically in this particular time frame. So do you see that the lower carriage and the lower grammage will be much higher sold compared to what we've seen in Q1?
So see, for us, our average ticket size has been in the range of 70 to 80,000 rupees. If you do a back calculation, it is around 7 grams to 8 grams of gold. So we have always been a very strong player in producing jewelry which looks heavy but weighs light. And that is what is allowing us to penetrate into the smaller towns and, the upcoming suburban areas, catering to a wide range of customers. So that is the one approach. And the second part is that, yes, with the higher gold price, we will see that the weight ranges are going down, which will help us to continue our growth. And as far as the lower caratage is concerned, most of the lower caratages are used in diamond jewelry, whether be it 14 carat or now that the 9 carat will go in. And we are continuously in the process of developing new designs in diamond jewelry as well as gold jewelry. Last quarter, we have come up with more than 11,000 designs because that is one of our strengths. And I think that, yes, in the long run, it is this manufacturing ability and continuously development of design which will help us to gain more market share and gain more customers.
Okay, so strategies are in place. A 7% margin is going to be sustainable, or ROC, which is going to see an improvement on the back of an asset-light model, is something that the street should be eyeing as well. Thank you so much for joining us on the show and giving us those comments. But moving on, China has now loosened urea exports to India, and this is seen as a big move in the India-China diplomatic ties, as there would be consistent supplies for farmers. But it is a big negative for companies like Coromandel. Varsha joins us with all the details. Varsha, what are you picking up? The stock also near the day's lows.
Yes, exactly. The news suggests improving China-India diplomatic ties, and this move will actually benefit Indian fertilizer companies relying on imports. As previously, this was banned, which had an impact on tightened urea supply in India. Now, why this is negative for Coromandel International? Because earlier ban had shifted demand towards complex fertilizers, which Coromandel International used to make, and this benefited companies like who are involved in the complex fertilizers. But now with easier urea supply, this benefit is likely to diminish, and hence what was tailwind earlier is now been converted to headwind, and this is the reason why Coromandel International is down in trade today.
Well, thank you for that, Varsha, and definitely let's pull up with the one-year chart of that, because we've seen that kind of sustained positive push essentially because of this regulatory aspect. Stock is up almost 20% this year, and we've seen post the pandemic, post the prices correcting for something like these fertilizers. We've seen the positive put for Coromandel. Now going forward, that will be one of the other ones to watch out for. But the other counter that's in focus is Suzlon Energy. Now that is after the stock's down in trade today. It's almost down 4% now. And that's also one of the major concerns is the resignation of their CEO, Himanshu Mody, was actually making Suzlon lose power. Let's go across to Varsha to get us more on this.
Right, thank you for that. I would say there are more concern when it comes to Suzlon Energy, though operationally the numbers were good, but net profit had an impact, and this is one of the reasons why you're seeing the stock is down. And the other concerns, let me start with, Himanshu Mody, who's the CFO of the company, will be exiting the business. Now, Himanshu Mody is instrumental, when it comes to turnaround that Suzlon Energy has seen. His exit raises question about underlying stability or his long-term confidence in the company. Let's see how Suzlon has reduced its debt with Himanshu Mody. If you see, the debt in FY21 was 6,925 crore, which has reduced drastically in FY25 with 323 crore. So this shows how efficient Himanshu Mody was. Now his exit will actually a question mark when it comes to Suzlon. On to the net addition of order book. There has been slower addition or order inflow since
its last few quarters, and net order inflow in Q1 FY26 was around 336 megawatt, and over the quarters, if you see, the net addition in order book has decreased, and this is also concerning, and one of the reasons why Suzlon is down today. Also, if you see, there has been reliance in older order books. So 5.7 gigawatt of order book gives a revenue visibility though, but its execution is spread over 24 months, and the significant company will have to have significant new orders to to keep up that growth, or to have a strong growth going ahead in FY26 and 27 as well. And of course, the softening realization and lower EPC mix will actually put margin pressure going forward, because there was a lower revenue realization due to downtick in EPC mix and lower margin projects. This means the company is going towards lower margin projects, impacting overall profitability when it comes to per megawatt, and because company is doing more wind turbine generator business, which is a low margin business, and this will impact profit, or this will impact margins going ahead. On the valuation concerns, if you see, a lot of analysts have raised their valuation concerns. Nuvama find limited upside when it comes to current market price, sees upside of only 6%, while they have also, a lot of analysts have also started trimming their EPS, because analysts are trimming FY26 and FY27 EPS based on low valuation or low realization. So all these concerns give us a hint that there are some problems when it comes to Suzlon Energy.
Thank you so much for that. And the key management exit who's helped the company get out of the woods is getting out, and that becomes another overhang as well. But moving on, Smartworks, co-working, that's another space that you should be watching out for. The losses have really narrowed to a single digit from 23 odd crores. But what's interesting is the stock continues to trade under pressure, though a mild recovery from the day's lows has come in. Harsh Pinani, Executive Director at Smartworks, joins in. Harsh, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. My first question coming to you is, what is going to lead Smartworks to a path of profitability, taking into consideration that the losses have narrowed, and will FY26 overall be in black now?
Thank you so much for having me on the show. This quarter marks a very decisive step in Smartworks' journey towards becoming one of the largest workspace platforms in Asia. Today, we've expanded our footprint to 12 million square foot. While you've seen very strong revenue growth for the company, but the more interesting statistic to also look at is that on a normalized basis, our EBITDA for the full year was at a 12.5% last year. But on a quarter-on-quarter basis, the number was 9% last quarter, which is almost doubled now to close to 16%. And we do acknowledge, as you're aware, that this industry, and particularly Smartworks, is accounted by Ind AS accounting standards. When it comes to Ind AS accounting standard, we are required to make accounting provisions. So for example, if you're paying a rent of 100 rupees, in year one, you're needed to make a provision of 120. So you're making that notional 20 rupees incremental outgo, which over a period of time thins down. So the reported numbers that you mentioned are actually Ind AS numbers. The company has been profitable for the last 4 years. And in fact, on a steady state basis, like I mentioned, our EBITDA has grown from 9% last quarter to 16% now.
Mr. Binani, a very good afternoon to you. Thanks so much for joining in. It's Puneet this side. Firstly, many congratulations on your listing. In terms of, when I was going through your presentation as well, we've seen that you seem to be better placed versus competition because of the lower operating expenses that you have, and as well as what you're guiding for as well. So if you can just give us some perspective of where do you expect to be in the next year or two in terms of adding capacity as well as maintaining the lower operating expenses that you have currently for Smartworks.
No, thank you, Puneet. That's a great question. It's a very exciting time overall for the industry. India's commercial real estate in a report recently pegged it at 1 billion square foot. Within this, flexible workspace has risen like a phoenix, and from a base of almost 0% has scaled up to more than 12% in terms of penetration. And in fact, last year was at about 100 million square foot. Now, here, as you rightly pointed out, Smartworks has been the market leader, but at the same time, we've grown faster than industry. So while industry is growing at about 18 to 20%, we've been growing 1.5 times more. The reason we've been growing faster is because of our unique business model choice. So we take really large campuses, and that makes our model very scalable. Because we are taking large campuses and filling it up with mid to large enterprises, right? The likes of unicorns, Fortune 500 companies, global MNCs, we are able to fill up the campus very quickly and have a lot of predictability in our cash flow. So from an expansion point of view, our lower cost of operation, the cost efficiency will enable us to continue pricing our product at value and passing on that benefit to our customer without compromising our margin. So we are
Harsh, my question to you is then, with that lower OPEX and CAPEX, how will you sustain the cost efficiency, because you're expanding into other regions like NCR, Calcutta and Chennai? That's one. And two, guide us on the seat addition that you then plan for FY 26-27 whilst maintaining operational efficiency.
Absolutely. We are a pan-India player and we have presence in 14 cities. But like you would have seen in our numbers, we are very concentrated in the cities we are expanding. So the top 7 cities of India, namely Bangalore, Pune, Gurgaon, Noida, Chennai, Hyderabad, continue to see a lot of expansion, while we also expand in other tier 2 cities. So currently we are having an operational capacity of 8.3 million square foot. And we have added another 3.7 million square foot. So that makes our total footprint 12 million square foot. On a steady state basis, we've been adding about 2.5 to 3 million square foot every year. So we are guiding that we will continue adding 2.5 to 3 million square foot in the next foreseeable future. And what makes this interesting is our business's real strength is in our cash flow. So after our IPO, the business is reasonably well from a balance sheet point of view qualified, and our OCF to EBITDA ratio is the highest in the industry. So we can continue growing by 25 to 30% every year without any additional funding, because the cash flow that the business has been generating and will continue to generate in a post-IPO environment should be adequate for us to continue our scale up of 2.5 to 3 million square foot every year.
Yeah, thank you so much, Harsh, for joining us on the show and sharing those views. So that's the management of Smartworks. But moving on. Samvardhana Motherson, an interesting set of numbers. The profit number is below what the street was estimating. Puneet, something's gone wrong, but the stock not really reacting. If you can just get the intraday chart of Motherson to see, you did see that dip that did come in right now, but it is seeing some bit of a recovery. If you could just quickly take us through.
Well, those 4 key numbers, are definitely a miss on profits. Profits were expected to come in at 909 crores. It's come in at 512 crores. So there's definitely a miss there. We've also seen some impact of the total expenses for taxes rise. So in this particular quarter, it's coming at 265 crore versus 136 crores. So you're seeing that 130 crore impact there. But it's also a weak performance on EBITDA margins at 8.1%. versus 9.6% is weaker, because the estimates and the numbers that we had, we were estimating roughly between 8.8 to 8.9% EBITDA margin. So it's definitely a little weaker than that aspect. This has been consistent with Motherson over the last couple of quarters, that the margins on a year-on-year basis have been lower, and that's largely because of increase in commodity prices. We've seen steel inch up in this particular quarter by 6%, as well as increase in the copper prices. So there is that impact on EBITDA. This also has a 1 quarter lag in passing. So we could see some more time before we could see the revival come in terms of margins. But largely on the numbers, while the revenue does seem in line with estimates at over 30,000 crores, we've seen that impact on margins and profitability.
And the stock right now, if you see, is almost at the day's highs with gains of 2% coming in there. Can we just quickly have that intraday chart? There you go, spike to the day's highest levels. I think we will need to do some more digging in terms of what's working for them and what's not. But that's the story with Motherson, Samvardhana Motherson. But completely out of time. Thank you from Puneet, the team that put the show together, and myself. But as we slip into a short break, India's first AI unicorn, which is Fractal, Analytics has filed its draft papers with SEBI for its whopping 4,900 crore rupees IPO. My colleague Tamanna Inamdar had spoken to the co-founder and group CEO of Fractal, that is Shrikant Velmakani, on the Disruptors show. He actually shed light on AI's disruptive impact on the future of jobs. Let's quickly listen in to a bite of that conversation.
Why is Fractal a big deal? Why is Fractal a disruptor in its space?
So Fractal powers decisions in enterprises. Just imagine you and I as ordinary people make maybe a couple of hundred decisions every day. From every morning when we wake up, what to wear, how to go to work, or what to eat. We make these decisions. Many of them are conscious decisions, some are unconscious. So think of enterprises. They make millions of decisions. What should be the price of a product? How should I market it? Who should sell it? How should we sell it? What should be the campaigns? All of that stuff, right? Each of these decisions can be powered by algorithms. And Fractal powers these algorithms that help companies become better at what they do, more effective at what they do, increase their productivity, become more customer friendly, and so on. And now with the progress in AI, these are becoming extraordinarily powerful in driving a competitive advantage for companies. So Fractal is a big deal because we are really powering the entire Fortune 500 ecosystem in getting better, being more productive, more employee-centric, more customer-centric.
What do you say to the doomsday conspiracy theories that there will be a point where artificial intelligence will gain superiority over humans, and then that's the end game?
This point in the world is called singularity. And we may be 3 to 5 years away from a place where we have AGI or singularity, that AI is getting so good that it will beat human beings at everything.
Just 3 to 5 years?
3 to 5 years. And the question is, if we have an intelligence, form of intelligence that is significantly superior to the current human intelligence, what are the chances that that superior intelligence will listen to us? So the idea of all the AI research that's happening around safety is to create a system by which AI will never have those kinds of goals that are superior to human.
In terms of jobs, the big jobs question, for example, the number of people you hire today, in 5 years, would you need the same number of people?
For the same quantity of work, we'll need only half the people or maybe a third of the people.
How large will be that stage of disruption, job disruption because of AI?
It could be 5 to 10 years, which means that someone could go through a whole career and disrupt it. So it is not easy. So we have, as societies, as countries, we have to come up with systems to manage this situation. The economic incentive of using AI to make progress is so strong that companies are going to say, look, I'm going to use AI instead of using something else. And yet there's one more thing, which is about human outcomes. Think of accidents. Today in India, 1.5 lakh people die every year because of road accidents. In the US, 35,000 people die every year because of road accidents. Now, if we have AI-driven vehicles, we can eliminate that loss. So do you want to save 200,000 people from dying every year? Or would you not make AI progress because you'll save some jobs?
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए. मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म. वाह क्या बात है, क्या बात है.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, after a volatile trade, Nifty seems to be holding off to the initial gains that we have seen. It's up 0.5% in trade. Even the Nifty Bank Index is up more than 120 points in trade. But let's go across to Hiral to get all the action in the small cap space.
Thank you, Somit, for that. Let's quickly pull up, what the small cap indices are indicating, because you're seeing a lot of stock specific action in trade today. If you see the BSE small cap index, gains of around 0.5% coming in there, and similar is the trend with regards to NSE small cap 250 as well. If you pull up that one, similar charts that we are seeing. But let's look at individual stocks on the back of earnings. NMDC Steel, strong set of numbers, 16.5% up move. Honasa Consumers, there's a CLSA outperform upgrade coming in on that one. Landmark Cars as well. The commentary in terms of the con call has been enthusing, and that's what has put the stock with gains of around 8%. Apart from that, Venus Pipes reported numbers during market hours on Friday, but again, highlights from the conference call is what is seeing that positive momentum there. Anthony Waste, order win and earnings. Premier Explosives again on the back of earnings, 16-17% up move coming in there. Windlass Bio and JM Financial are the other two counters which are buzzing on the back of earnings. 12 to 14% is the kind of upside that you're seeing on these wins. On the back of other names, Yatra, that company reported numbers I think on Friday, but still 12 to 13% up move on that one. Infibeam, actually this is Infobeam, not a Infibeam, and you have Sundrop brands which are seeing gains of almost 8 to 9%. Skipper is another one which is buzzing in trade. Techno Electric, both these counters, all of them up in that range of around 5 to 8%. Archean Chemicals, the stock is buzzing on the back of the Union Cabinet, which has actually given some approvals with regards to setting up for semiconductors, and that's the reason why Archean Chemicals is seeing some bust in trade today. And Transrail is another one which is up in trade on the back of an order win, and this is again from the same list from the broader markets. Camlin Fine is a company that they will be addressing as well. Transrail Lightning again has cooled down right now. Let's just pull up a Camlin Fine. If you pull up a 5-day chart of this company, you'll see the stock has been constantly locked in lower circuit. Today as well, down 5%. In the last 1 week, 23-24% is the kind of downside that you've seen on this counter. So lots of movers and shakers, Anushi, for you and Somit to address today.
Yeah, absolutely. And while we are on that subject, let's bring in the first management on board. And this is on the back of the first quarter results that we are looking at. Shriram Properties is a stock in focus, and we are going to be talking to Murli Malayappan, the CMD of the company. Welcome to the show, sir. First of all, if you look at the Q1 earnings, you're seeing a strong set of numbers in terms of revenue recognition, which has happened in the quarter. Even if we look at the sales volume, the sales value, we've seen about a 17% of an uptick in that. So just want to get your overall perspective in terms of the key launches that aided the growth in terms of where the volumes and the launches are headed.
Thank you, Anushi. As you have seen, Q1, we have given a good performance with about 24% revenue growth year on year and about 18% PAT growth year on year. And gross profit growth is about 70%. And sales again year on year about 17% growth. And we have handed over about 740 units in Q1, which is a record break. We handed over about close to 3,000 units last year. And this year we are looking at 20% growth in that. So we are there with a good start. Coming back to the sales launch in the next the remaining period of the financial year, we are looking at launching about 5 to 6 million square feet of new projects, close to about 8 to 10 projects with a GDV of close to about 4,500 crores. Projects are all fully lined up. In fact, Q3 will be launching 3 projects for which we just received approvals. We are waiting for ERA. Hopefully in the next 15 days time, we'll be ready to launch 3 projects. So project pipeline is stacking up very nicely. We are extremely bullish on the current market demand, particularly in the segment where we are leaders, mid-market and mid-premium segment. We are the leader in the industry in the country, and there is a very strong growth momentum taking place in this segment. And the cities where we operate, Bangalore, Chennai, Pune, Kolkata, there is a strong momentum for mid-market and mid-premium segment.
Right.
We're extremely bullish on numbers.
So while we are seeing this growth numbers coming up, I also want to understand collections. Now, in this quarter, we've seen about a 5% of growth. While if you're looking for FY26, you're seeing about a 35% of an increase or so. So is collection expected to increase in the subsequent quarters? Because currently we've seen a muted sort of a growth in terms of where the collection growth is concerned.
It's a typical for the industry, which is a normally festival time. People spend lots of money. Generally, it will be end of Q2 and Q4. There will be lots of collections. If you look at across the industry, Q4 will have the highest level of collections. And Q2, Q3, there will be momentum. Q1, was their initial financial year end. So there will be a slowdown on the collection on Q1. But Q2, Q3, Q4 will be very good. And also milestone collections and handover collections during this period, which is very, very crucial. We expect good growth momentum to continue on collections.
Also, sir, if you could share any guidance on the pre-sales growth that we could see in overall FY26 compared to the last financial year?
We are looking at doing about 5.2 to 5.5 million square feet compared to last year of 4.5 million square feet, which will be close to about 20% growth is what we are looking on the pre-sales value. In terms of revenue recognition on the P&L, we are looking at 30% growth on revenue and as well as on the PAT for the full year. So for which all the projects are under execution in a right way. So we are pretty confident of achieving this 30% growth on both revenues and PAT, both ways.
So I just want to understand a macro perspective in terms of where the real estate sector is concerned. Firstly, want to understand how pricing growth has shaped up for you. And now, in consistent reports, we are seeing that affordable is one segment wherein the demand has continued to see a decline. Just want to get your overall perspective in terms of how the inventory levels are now shaping up and what's the kind of pricing growth that you're looking forward, because the expectation is that this will stagnate over the quarters.
Absolutely right. Luxury segment has gone through some turbulence. There could be some ups and downs. Affordable housing, not much supply which is happening, which is not good for the industry. But where we are present on the mid-market and the mid-premium segment, we expect tremendous momentum to continue for the next 10 years. Not now, next 2 quarters or 3 quarters. We expect the momentum to continue where we are the pioneer and leader in the industry on the mid-market and mid-premium segment. In fact, affordable housing, Government of India has to address how to address the cost aspect and ease of doing business on the affordable housing. Then only the supply will come in. But as an organization, Shriram Properties, primarily focusing on mid-market and mid-premium segment, where I feel that momentum to continue comfortably for the next 10 years.
Well, thank you, sir. Thank you for joining us and giving us those explanation about the outlook for Shriram Properties. With that, let's also welcome in Sneha Poddar, Vice President Research Wealth Management, Motilal Oswal. Sneha, coming to you on this counter, Shriram Properties. Have you tracked this counter? How do you see the outlook going forward here?
Okay, good afternoon. So basically, see, with regards to Shriram Properties, though the numbers have been good, but somehow we believe that in the overall real estate space, one should only stick with the ultra luxury players, because there only we seeing that the demand has sustained and even the prices have sustained. And moreover, the affordable or the entry segments, these are the segments where there has been a lot of volatility which has been witnessed, and we though the rate cut benefits will be witnessed in those segments, but we're not really sure how the demand would sustain in the long term, and whether the pricing power will return to these players. So it's the our comfort lies more on the premium or ultra premium segment, wherein our top pick would be Prestige, followed by Lodha.
Right.
Okay, so that was the outlook for Shriram Properties, but we'll continue on our discussion within the real estate space. And now we have Ashiana Housing in focus. Varun Gupta, the whole-time director of the company, joins us. Mr. Gupta, if you are looking at the numbers, we are looking at a decent set of key operational numbers. Just want to understand from you, which projects launches have aided to these numbers that we are seeing in terms of pre-sales, and what are the upcoming projects in focus for the FY26 period?
Ma'am, one of the best things about this quarter was we had good pre-sales this year without really significant launches. We just launched a very small project called Ashiana Aravali, which is all of 74,000 square foot. It was like one block of erstwhile project which was stuck due to regulations earlier, which we launched now, and a phase launch of Ashiana Tarang. So this quarter actually was very, very good in terms of secular sales across locations, across projects. And going forward, we have 2 new projects to launch, phase launches separately of existing projects. We have Ashiana Aroham in Gurgaon and Ashiana Maya in Jamshedpur, which we plan to launch in the 3rd quarter of this financial year. And the other bit that's been becoming bigger for us, and I think will become bigger as a segment for us, is the senior living business. We had good pre-sales in the 1st quarter, and we expect 2nd quarter pre-sales in senior living to be even better, and that to become a larger part of the business.
Right, sir. Any guidance if you could share us on the pre-sales growth that you're looking for FY26 for both the senior living and the normal business combined?
So the normal business and senior living combined, we're looking at 2,000 crores of pre-sales total across the business, so which is not a very significant growth from 24-25. It has a lot to do with limited inventory for us with sales, because we had sold very well last year and the years before that. That said, we see senior living to grow. So we are expecting Senior Living was about 375 crores of pre-sales last year. We expect it to grow to about 500 crores of pre-sales in this financial year.
In fact, for FY26, you also have a capex plan for the senior living segment. You're seeing about 425 crore of an outlay over there, and this is with focus in new markets that we are looking at, including the likes of Bangalore and Mumbai. Just want to get your key understanding as to why these particular markets that you're targeting, and what's the overall picture here in terms of senior living.
So in terms of senior living will be the larger future for the company as we go forward. And the reason to target Bombay and Bangalore is that the demographics are in the southern and the western part of the country, which support senior living more. The northern part of the country is younger, the southern and western part of the country is older. We've been in Chennai for a while, and then natural progression was to go to Bangalore in the south. And in the west, we have been in a place called Talegaon, which is in between Bombay and Pune, and we wanted to extend closer to Bombay to target a little bit higher price point audience, and therefore that project there.
Okay, and with that, in terms of the Q1 numbers also that we are looking at, while revenue was up over 138%, you have over revenue of 4,682 crore, which is like locked in for the next 2 to 3 years period. Just want to understand, how will execution firstly shape up for this, and what's the kind of improvement that you're looking in terms of the margin profile also going forward?
So two things: execution timelines we do give in the updates. We are generally on progress to execute. Our execution team and construction team have been doing very well, even though it's been a little bit of a tough environment in terms of inputs like labor and materials. But construction is as per schedule, so we should hopefully deliver as per that execution plan that we have put together for the next 3 years. And margins this year will remain a little subdued, but from next year onwards, I think PAT margins should be in the teens. So between early to late teens, depending on the quarter or the year, but we should hit teens margin consistently.
Thank you, sir. Thank you for joining us and giving us those future prospects of Ashiana for housing currently. Well, with that, another stock that remains in focus is Venus Pipe. Now, that stock is up 3% in trade, and the major reason behind this kind of a move in this counter is the strong guidance that has come in from the management post the post-market close yesterday. Now, the company has upgraded its revenue guidance for FY26. They are now expecting the revenue to grow nearly 25% in FY26 as against the earlier guidance of 20% given earlier. Now, with this, the management has also given strong guidance for margin around 16 to 18% is what they're expecting the margins to be for FY26, and they are also saying that for FY27 they're expecting a 20% revenue growth. When it comes to the export market, the growth has been quite healthy, and they're also saying that the US mix in exports still remains very small, and hence they do not see any major risk that could come in for the counter because of the Trump tariffs that have come in. And apart from that, they're also saying that the domestic market that has picked up really well on the back of the power sector demand, and they're expecting good demand for stainless steel players in this market post the duties that were imposed by the Chinese player. Most of the brokerages, in fact, all the brokerages that have come out with the note have a buy rating on the counter. Investec has maintained the buy rating with a target price of 1,665. They say that they like the basis of its execution on capacity expansion and strong volume growth. They also believe that incremental expansion is offered by Venus Pipes here and at attractive return on capital employed in titanium tubes, hygiene tubes and fittings. When it comes to Nuvama, they have maintained the buy rating and have hiked the target price to 2,290 from 2,120. They see that the power demand is giving a strong boost to the sales, and they're also saying that the domestic business has revived for Venus Pipe, and they believe that volume growth will support the top line growth as domestic business will recover on a Q-on-Q basis. Antique has maintained the buy rating on the counter with a target price of 1,719. They are saying that the strong export sales will aid the top line growth despite the domestic weakness, and they believe that value addition projects will drive the growth for the company going forward. And lastly, DAMCAP has also come out with this note where they have maintained the buy rating on the counter with a target price of 1,650, and they believe that the recent stock price correction has improved the risk reward scenario when it comes to Venus Pipe. Sneha, coming to you on Venus Pipe, any views on this counter?
Okay, so the numbers has been quite decent for the company. It's the outlook which is really driving the counter. Now, basically, if we look at the overall demand, the demand so far has been quite tepid, but now the gradual uptick is being visible, and this is largely because the capex program has been front-loaded by the government, which is now clearly showcasing in the resulting in a good demand recovery. So going ahead with the infrastructure coming up in a big way, the demand will get a big boost. So hopefully the guidance which the management is talking about, it should be achievable by the company, because the improvement in demand has been visible over last few months. So that is definitely there. Plus in terms of exports, the exports have been really good for them. So apart from US, where we are are a little cautious, but the demand, especially from the Middle East, is something which will be a key growth driver for the company. So exports, which contributes almost 40-50% for the company, will be a key area to watch out for them, which is doing really well.
Okay, so overall a positive outlook is what we are seeing for Venus pipes. So there's the view for the Venus pipes that we are looking at. But another stock in focus is Antony Waste, and this is on the back of an order win as well as its Q1 numbers. Jasmeet joins us with more details on this.
Well, right, yes, thank you for that. The stock is buzzing in trade and it's up 6% in trade today. While it's on the back of order wins as well as the results, let's quickly get you all about what the company does before going to the order win and the financials. The company is into municipal solid waste management systems. They nearly manage solids of operating 90% of Mumbai's waste, while the company also provides a full spectrum of waste management service, that be from collection, transportation and conversion into the fuel. Talking about the order win, the company recently won an order worth 3,200 crore. It's a combination of two orders. The order is from Andhra Pradesh and the order is to provide waste to energy management vehicle. Talking about the key financials and the Q1 highlights of the company, the revenue sees an uptick while the margins expand. This is on the back of favorable seasonal trend for the company. Basically Q1 is seasonal for the company, and the other would be the establishment of the plant. The operational highlights will be the company managed roughly 1.33 metric million tons of waste in the Q1, which is a 16% uptick on YOY basis. While if you look at the other highlights, the refuse delivered fuel, that's the fuel which is created from the waste, has also seen an uptick of 62% on YOY basis. If you look at the sales of the compost, again that's a byproduct of the waste, even that's seen an uptick of 10% on YOY basis. Overall, it's a positive outlook. When we talk about the key numbers of the company, the revenue is up by 9% while the margins have expanded by 50 basis points. So this is all about Antony Waste Management Systems.
Okay, thanks for that, Jasmeet. In fact, the stock is up over 5% in trade currently. But let me go across to Sneha for her view on this counter.
Okay, so with regards to Antony, the recent order win which they have announced is a big order, so it definitely adds to the already robust order book that they have, and this provides a very strong revenue visibility. And given that they have a big order size, but the balance sheet also is very strong for the company, which which will provide the support for the execution. So we are quite hopeful that with these kind of order wins, the next few years, the earnings growth visibility is clearly there for the company. And so overall, the outlook remains quite positive, and going ahead with more and more adoption of cleaner energy with regards to the carbon credits and all. So definitely such kind of projects are more likely to get announced. So I mean, the opportunity, the pipeline for the company seems to be pretty strong, and overall the numbers do support on it. So we are positive on Antony.
Okay, so a positive view for Antony Waste is also what we are saying. Thank you for that, Sneha. So thank you for the perspective on the various stocks that we've covered on the show so far. But that's all the time that we had on this edition of Small Cap Bazaars. But do stay tuned to India Market Close coming up next.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
Watching India Market Close here at NDTV Profit. I am Mahima Vachrajani. With me is Harsh, Saita and Neeraj Shah. Let's take a quick look as to how the markets are doing. Well, definitely a very good day for the markets. The Nifty 50 up 0.7% as we speak, and the Bank Nifty also seeing gains of about 0.4%. In terms of the Nifty 50 heat map, let's try to pull that up, because that's going to be an interesting one to watch out for. A lot of green on that table, led by Apollo Hospitals, of course, and that graph will be an interesting one to see, because it's gained throughout the day, up 7% almost. Hindalco also doing well in trade today, up 5%. Hiromoto, again a good day of trade for Hiromoto, up 3%. BL up 2% as well. Dr. Reddy's, Eternal, Cipla, a lot of pharma names doing well. Apollo Hospitals, Dr. Reddy's, Cipla. There's also HDFC Life, which is seeing gains of about 2% almost. Power Grid, ONGC, Tata Motors, M&M, auto names also doing well in trade today, by the way. But something that's under pressure, Hindustan continues to be under pressure, down by about 1%. ITC down by about 0.4%, and some names like Titan and Adani slightly seeing some profit booking. Let's also try to pull up the advance decline ratio and see how that is panning out to be. There you go, 1400 odd advances versus that of almost 900 odd declines. So that ratio is not almost 1:1, but almost there. But this is the graph, it's narrowing by the day, but so that indicates that there's some pressure in terms of where the broader markets are there. But before I go on to the broader markets, let's also try to pull up the sectoral heat map and see how sectors are doing in trade. There you go. It's the defense that's leading the pack today, up 3%, and that's led by a lot of defense names. Nifty Healthcare doing well. Pharma, of course, the gain led by Apollo Hospitals. Metal also doing well in trade today. Nifty Auto also doing well in trade today, up by about 1.3%. Nifty Media also fairly doing well, but it's the FMCG that's almost flat, and PSU banks also almost flat there. So that's with regards to where the sectors are concerned, but how the broader market's doing.
It's largely in line, Mahima, as well as viewers. Good afternoon. With regard to where the Nifty is concerned, 0.75% higher on the Nifty mid cap. The Nifty small cap absolutely in line, 0.2% odd higher in trade. But the good part is, one, the trading in line. Two, the Nifty is doing well despite the banking index as well as the IT index underperforming. So both of those indices underperforming, and despite that, we're seeing a decent move on the Nifty today. For sure, it's 2 steps ahead, 1 step behind, as has been the case. Out of the last 3 days, we have seen yesterday as a bit of a dull day, but Monday and Wednesday both have been decent in terms of the day of trade. Now let me also venture and try and give you some quick hint, because we covered the MK conference, and these are some of the takeaways that are coming your way with regard to what the team at MK is hearing. They're saying that the overall tone with regard to how India Inc. is speaking is positive. They are optimistic with regard to the prospects for the future. Many corporates hopeful of a negotiated settlement where tariffs is concerned. So that seems to be the consensus view. Let me talk about demand. Demand outlook for the festive season is again positive, is what most commentary seems to be suggesting. Companies are seeing signs of demand recovery happening in H2. Lenders expect the government to support the private sector in case final tariffs end up at the 50% mark. That's the other piece. And then there is going to be, from a lender perspective, impact on asset quality from export exposed sectors. Textiles, MSMEs, likely some of those candidates which might remain under pressure. Neeraj.
Well, let's get in Kush Bora to talk about what to do in a scenario like this. He's founder of kushbora.com. Kush, good afternoon. Thanks for joining in. Are you taking trades on the indices for the next couple of days, or heading into the long weekend, you rather stay light?
Hey, hi, Neeraj. Good afternoon to you. I am taking a trade, and that will be on the long side on the Nifty. And if you recall, yesterday we had a discussion, and we said, let's go long on Nifty with the stop loss near the 24,400 mark. Glad to see that that's been protected, and the index is moving higher. Now, also if you're, if you track derivatives, then 24,400 put had a very strong base, but that has very sharply and smartly shifted to 24,600. So there is this comfort from the put writers as well now, who believe that perhaps the 24,600 mark will act as a near-term support zone. Momentum indicators also turning north. Plus, if you if you play probabilities, or if you dabble with probabilities, then 7 consecutive weeks of negative closing, a fairly rare event. So get some comfort from there as well. I think this rally could well continue to 24,800, 25,000 mark. Once we get there, once we cross those levels, we'll see how to, how to deal with the markets then. But for now, I think this recovery could head a little higher as well. So if you have a position, continue to hold. If not, you could still build it. The risk reward ratio may not be as favorable, but at least the direction will be in your favor.
Okay, and any trades in Bank Nifty as of today, Kush?
Hi, Mahima. No, not really. See, for the past 4 sessions, what we've seen is, at least for the last 2 sessions, and if I count today, then the third one, it seems like the Bank Nifty is forming an, inside bar, which is suggesting that, there is contraction, there is consolidation. We've seen some correction on the Bank Nifty already, and like we discussed yesterday, because some of the heavyweights are close to the support zones, the downside on this one may be a little, restricted, but I don't see a very sharp and a very big upside as well immediately. So while the bias is positive, largely because of the support zones that kick in for the heavyweights, and also because the PCR for this one is at 0.75, because the downside is restricted, you could stay long if you had the position, but I wouldn't suggest a fresh trade on Bank Nifty on the long side. I would prefer the Nifty instead.
Okay, and your picks this afternoon, Kush?
Sure, Harsh. They're more like updates because these calls have been flashing on the RHS on the screen for the viewers for almost all of the day today. So starting with Godavari Power, we've seen a good accumulation on this in the last 2 sessions. Today we are seeing a breakout above the 200 mark very comfortably, sustaining above that. If the closing comes below above that level, then you could see the stock head to 212 or higher levels as well. If you did buy it, seeing the call on the shows on the channel this morning, then I suggest you trail your stop loss from 191 to 197 now. The other one is Tube Investments. Here too, for the last 2 sessions, we've seen a very healthy volume action. Today the volume action is muted, but the price action is fairly healthy. So for the upsides of 3080, 3140, and a stop loss around the 2960 mark, you could go long on Tube Investments. I have a couple of updates if I can take a quick 20-second. Thyrocare is a stock which we've been discussing for multiple times over the last week, 10 days. Had a very good breakout today. 1400, 1405 was a second target. The high today is 1435. It's seen a sharp round of profit booking from there on. So if you do have a position, it's best to get out and take some money off the table if you haven't done that already. And the second one is Indian Bank. Here the view is slightly different. We discussed this as a Monday call, on Monday morning along with Capital Labs, which also is doing rather well. But Indian Bank hit that second target of 675 on Monday itself. It's now consolidating. The profit booking is on low volumes. So you might want to continue holding on to Indian Bank if you did have it. Keep a trailing stop loss at 6.
Okay. Kush, anything on EIH hotels that you're seeing? Because strong volumes there, almost 12 times 30-day average, and stock is up 13% as we speak. Anything on the charts that's attractive enough?
Well, not really. I mean, the volumes are healthy. The up move in terms of the price action is healthy. But if you see, for the past 7 sessions, the stock was actually languishing. Some bottom formation attempt was there, some breakout was there. And today the stock in this jump has taken out a couple of DMAs as well. But my question is around the sustainability. The moves that has come about, usually around the 390 to 400 level, you see a supply zone on the stock today. Also, if you see the high that the stock has made is close to that 390, 470 mark. So once you close above 400, I think there will be the supply pressure hangover that will come off, and then the stock would move higher. But up until then, if you did have a position, I would rather exit and wait for that closing above 400 or look for another trade.
Okay, let's get in. Kush, stay on. Let's get in the management of Interarch Building Products. They came out with those numbers when revenues were up 25%. EBITDA maybe not as strong, but the net profit buoyed by some other income was up about 40% as well. Let's get in Mr. Arvind Nanda. He's MD of Interarch Building Products, Johnson right now to talk about the numbers and the outlook ahead. Mr. Nanda, good having you. Thanks for joining in. How would you say Q1 summed up? Did it go in line with what you had estimated, or could you have done a tad bit better? Let's just talk about the revenue numbers first.
See, thank you for having me on the show. See, our Q1 and Q2 is normally always a little mix-up because of the monsoons and other activities throughout the country at various times in various locations where we are doing projects. We are very happy with the Q1, what we have done. We are also, like you said, EBITDA is not entirely similar to what we wanted. But we are also now building up, people capacity, our employee capacity, as we are planning to set up some new plants and add new capacity. So the people capacity starts getting added a little earlier than the plants come into play. Our Andhra Pradesh plant will be in play by this month end fully, the phase 2 also. And the Kitcha also will be sometimes in, I think, early September, if not end of this month. So we have added a lot of people to that. But otherwise, we are very happy. The turnover is much higher than the first quarter of last year. That's a very good sign for us to have a starting with a 30% higher turnover. EBITDA can vary quarter to quarter. Our strongest EBITDAs are always in the last 2 quarters, which then increase the average. So we are very confident that the EBITDA will be similar to or higher than it was last year. So nothing to worry on that front at all.
Okay. Sorry, maybe I kind of partly missed that. You reckon that through the course of the year and towards the better quarters, you will inch that up and it will come in line with what you did in FY25. Is that it?
Yes, if not better.
If not better. Probability of it being same is higher, or probability of it being better is higher?
The latter.
The latter, okay.
Okay, Mr. Nanda, this is Harsh here. I want to try and understand also, as you ramp up capacity, give us a perspective on what your utilization is currently, and as you ramp it up, what is the potential in terms of revenue? Because you've obviously got a good order flow coming your way. So it's only about execution. Is that the right way to think of it, or would you want to correct that?
Well, currently, that is the right way to put it. We are, in fact, restricted by our capacity, how much business we can take. There is a lot of business available in the market. That is why we are ramping it up. See, as a business, pre-engineered buildings have to finish the order that they take, even the largest one, in 10 to 12 months. So there is no long-term order. I can't take my current order book of 1,695 crores. I will have to finish in the next 10 to 11 months at the max. So capacity is very critical to it, and we are ramping up faster because we feel that there is a lot of opportunity for us in the market, which we may be missing out. Because as a company, we do not take orders which we cannot deliver as promised. So that is a very important reason for us to ramp up our capacity. And we are at full capacity. We are working at full capacity right now. In fact, we are taking support of some of our outsourcing satellite partners like JSPL, and we have 1 or 2 more to give us the critical items which can ramp up our sales and make us deliver our current order book also.
H2 will likely mean at least a 25% higher capacity which is on stream for you. Does that therefore linearly mean that your top line will also be that much higher? And what does that do to margins? Because this will also give you a little bit of scale. So some operational efficiency might play out. So where do margins therefore go? Maybe give us the FY27 picture. Maybe that gives us a better view if you feel that that's the right way to look at it.
Yeah, see, FY26, we have given out a projection that we will go up by 17 to 18%. I think we should beat that, but we'll have a clearer picture after the second quarter when our capacities are in, new capacities are in place. 26-27, we are anticipating another 20% increase beyond this 17-18. So we are going to go over 2,000 crores in 26-27, when both these plants will be fully operational. And in 27-28, we also feel that the new plants which we are now going to commence building now, they will also come into play for at least 2 quarters of 27-20, 26-27 as well. So 26-27, we are anticipating a turnover of crossing 2,000 crores. We are building our capacity for that, about 2,100 crores, I would say. And then another 20% after that for 27-28. That is what we are ramping up everything for. And we see that there is business in the market for that.
Mr. Nanda, so I wanted to understand that right now the capital outlay that you've planned is roughly 200 crores, and that probably gives you a visibility of 1,300 crores. I just want to understand a timeline as to that 1,300 crores from the new capacity addition that you're planning. What is the timeline for accrual of those 1,300 crores? And you've also said that 3 to 4 years down the line, you will be probably doubling your revenue. Considering the entire capacity ramp up that you're doing right now, doubling of revenue, is that a conservative approach? You can do better in the next 4 odd years, or will it remain the same?
Thank you. See, doubling our capacity, we were talking about from what our turnover was 23-24, which was 1,250 crores. So the figures I've just given you are taking us up to 2,500 crores, doubling from 23-24 to 27-28. We have also realized that today's market is such that if we create more capacity in advance, I think we might be able to break our own figures because our figures were dependent on what capacities we were building. So I think we want to go a little ahead of the curve now and build up capacities, because we feel that if we have capacities, we will be able to get more business. Interarch's positioning in the market is very good as far as pre-engineered building players are concerned. And there's a lot of business getting converted into pre-engineered steel building and pre-engineered heavier structures, high-rise building, data centers, the new age industries like semiconductors. Even today, we read in the papers that 4 new semiconductor plants have been sanctioned by the government. So these are primary clients for a company like Interarch. So we are trying to remain a little ahead of the capacity, but I think we will have more updated figures as the quarters and the years go on. It's very difficult to predict in our business what will happen many years later, but certainly we need to build up capacity if we want to do business. This business runs on capacity and capability and ability to execute that business that we take. So we are trying to remain ahead of the curve in that, but figures will keep getting updated as we go on.
Okay. When I was looking at the notes that came in after your numbers after the last call, you had spoken about how after securing that PEB order, which was maybe 300 plus crores, your words were putting us in a different league, this order that is. Now, could you tell us, when you say that order put you in a different league, are there other orders of that league which you are in conversation with, which you will get to as well? And therefore, can the uptick in the order book, Mr. Nanda, over the next 12 months be very different than what we've seen in the past?
See, we are just anticipating, what is happening in the market is, let's say last 2 years, there are a lot of orders in the market, 300, 400, 500 crores. Generally, they've been divided with 2 or 3 players, Interarch being one of the players in that, and Kirby and some other players also being a part of that. When we said different league, we meant that more of the bigger orders might come to just one player like Interarch. So business is already there. We are already bidding for a lot of business, which is, say 3, 4, 500 crores of pre-engineered buildings. Earlier, it would have been assumed that it will get divided. But by getting this single order, I think we have put ourselves in a league where we have shown that we are capable of handling a very large order like 300 crore PEB order. The customers trust us and we will deliver. So I think as soon as we deliver, I think it will probably finish by end of this year, early next year. People's perception, this pre-engineered building and who gets the orders is a lot based on the preferences that customers build up in their mind. It is not an L1 business. It is not who is the cheapest, but who can perform, who can actually do my engineering, designing, production in time, project management in time. They get preference. So just like 100 crore order put us in a different league a few years ago, I think 300 crores, by being the first company to get a single 300 crore order in India, as far as we know, has put us in that league. And certainly it will help us, but we don't want to predict anything because ultimately it is the customer's perception, which we think will change. And we have to wait to see how that changes.
Sorry, sir. So you've given very specific guidance with regard to top line. Is there a number that we can work with where margins is concerned, or where investors can work with where margins is concerned? That's my first question. Second is on debt. Would it be right to say you won't take on any meaningful debt while you're doing all of the capex that you're doing? And third piece on competition. Are you seeing any strong competition which is diluting that margin number which you will likely give out?
See, margins, we are very sure that we'll maintain what we are doing right now. even though we'll have to add a lot of expenses in advance. But I think margins we will be able to maintain, if not make it grow, because this business has a tendency to give you a lot of operational leverage. So I think we should be able to grow on that business. And there is no doubt that it will not do better. Sorry, what was your second question?
Would it be right to say you won't take on significant debt on your book?
No, we have enough cash reserves.
Sure.
We raised money in the IPO. We are generally debt averse as a company, even if before we were in IPO. But I think we have enough funds and we are generating enough funds to go with the speed which we want.
Understood.
Nothing very serious.
And competition, does that bother you at this point? You're likely giving away some business because there's just so much demand that you seem to be seeing. Are you giving away some business as competition are concerned?
I think it's bound to happen. See, our competition is always with ourselves. We don't really, as a company, compete with somebody else because we started from zero a few years ago. All the companies in play today, are parts of some large business groups or some foreign large business groups. So we have always competed with ourselves. How do we improve our service? How do we improve our delivery, our quality, our relationships? So we have always competed with ourselves, and competition is always good. You see, healthy competition is always very good. So that is how the industry grows. And we are very happy that new competition is coming up, new competition getting listed, new competition coming into public space will be a more responsible competition. So we are very happy with that, but there's a huge amount of business. India is very, very low in steel consumption as far as construction industry is concerned. We are 1/4 of the world average and 1/10 of China's. And the only way the country can build fast is steel. And more structures of steel building will be constructed off-site like we do. On-site construction is going to be a no-go place very soon because of environmental and labor rules and site conditions. So I think we are in the right place, probably at the right time, having worked very hard for 25 years. Competition doesn't bother us too much.
Okay.
We feel that we need to show the value to the customer.
Got it. Okay. Thank you so much, sir, for coming in and speaking with us. That's, of course, a very confident management of Interarch Building Solutions Limited, giving very solid guidance as well, doubling revenue by FY28 versus FY24, and 20% growth is what they're seeing, 18% this year and thereafter 20. Okay, but let's also quickly take a technical view. Kush, there's another stock which is really flying today. Something like a JM Financial. What's happening there? Give us some perspective.
Well, actually, this stock's been doing rather well for the last few sessions. There was a profit booking round about to the 50-day moving average, held its ground around that level for some time, and now there's a spurt. I think this is ideally should be news packed because the kind of volumes that I'm seeing on this one are humongous. So yes, I would actually continue holding on to this one if I had a position. If not, I would actually consider adding some for levels of about 200. So yes, you could continue to hold, add some more. If you do add a fresh, keep a stop loss near the 176 mark. I think the next stop for this one is 200.
Yeah, so Kush, clearly bullish with regard to that one. Stock up 13% today in trade. Time for a quick break. On the other side, we'll have Heard on the Street, and we leave you with an important word coming in from Purinju Veliath, who's the founder and CEO of Equity Intelligence. We spoke to him earlier today, and he says time for application segment of AI will be very important for the economy. Let's listen in to find out which stock is his top pick from this space. We'll be right back on the other side of this break.
The whole segment of information technology business in India, in services or in products. So everybody is having some kind of uncertainty whether AI is going to disrupt these IT companies or not, and which companies are going to be affected more, whether some companies are going to benefit. So I surely believe that the application segment of AI, artificial intelligence, the open AI, that is going to be a very important part of booming business in India. So which companies are looking at that segment, who are making inroads and doing things early, So one of the stocks we have been buying in the PMS recently. There are many companies. I'm just telling this name because their call and presentation, everything has come last week. Datamatics, an old company, I think a 3-4 decade old company. So it was not in fancy yet. It has been always at a reasonable valuation. So we found they are doing something fantastic in the AI segment, in applications, in building applications for different segments.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर जय जवान जय हिंद जय हिंद
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No.
Back with India Market Close right here on NDTV Profit, and that time of the show wherein we get you a sense of what dealing rooms are recommending in the session today in our special segment, Heard on the Street. Samit Sarkar is here with all the covers. Samit, good afternoon. What are you hearing?
Well, multiple stocks remain in focus. Firstly is the Bajaj Twins, Bajaj Housing and Bajaj Finance, which have been buzzing in trade. Dealers are indicating that Bajaj Finance, which is the promoter company of Bajaj Housing, has started the offer for sale process to sell some of its stake in Bajaj Housing. Now, the pricing is expected to be at a discount of nearly 10%. They have appointed the bankers for this process, and the OFS is being done by Bajaj Finance to meet the SEBI norms of minimum shareholding criteria. Now, apart from that, it's Bharti Airtel which remains in focus. Dealers are indicating that there could be some passive FTSE related flows in the last half an hour of trade. So keep an eye out for that. The flows are expected to be in the range of around 80 to 100 million US dollars for this counter. For Mankind Pharma, dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter in trade today. For Hindalco, dealers are indicating that large HNIs have taken some short positions at higher levels in this counter because today's move does not actually warrant, given the fact that the numbers are pretty much in line. So this 5% move, some large HNIs have taken some short positions here. So keep an eye out for that counter as well. And when it comes to Muthoot Finance and IRCTC, there are sell flows seen at higher levels on large HNI desks on anticipation of weak Q1 numbers that could come in from both these counters.
Okay, so that's the Heard on the Street segment today. IRCTC in particular hasn't done much actually over maybe the
stock
last
has been
4 to 5
consolidating, right?
Yeah, for quite a few years now actually. It's not just
been around that 600-700 band.
Yeah, since the IPO we saw that rise, but since then nothing. Kush, do you have a view with regard to an IRCTC?
I mean, right now it's not a very constructive one. As you rightly said, the stock's been correcting, consolidating, all of that. While I would say, there are some green shoots, and maybe there could be some uptick, but nothing yet to warrant a sharp uptrade on this one. So yeah, I would keep it on my radar, but I wouldn't really jump into a trade just yet on IRCTC.
Okay, some comments from the earnings con call for Apollo, of course, going on, and that stock is just doing so well that it deserves all the mentions today. We're going to talk about it in detail, right? 7% higher for Apollo Hospitals. So at some point of time, we'll of course talk about it. But because the con call comments are out there and they're talking about how they're eyeing 13 to 14% revenue growth in the hospitals business and the average revenue per bed the way it is, and it's also margin expansion by the healthco, it pays to maybe ask Ambarish Baliga if there are other hospital stocks that are worth buying, or do you believe Apollo is the one to bet on only from within that space? I mean, Ambarish, I actually thought this quarter a lot of hospital companies came out with pretty decent set of numbers.
Right. So I think, see, when you're looking at a specific sector, always you should have the top performer and the largest among them. And clearly Apollo stands out. But other than that, I mean, I would possibly, keep an eye, but not really, go ahead and buy right away because most of them have already moved up, including Apollo. But Apollo, clearly, I'll keep that in my portfolio.
Now, viewers, keep in mind, if you were looking to get a complete detail on Apollo Hospitals, I think you need to look no further. Of course, there are those con call comments, but there is beyond that as well. Reasons why we believe Apollo Hospitals should be qualifying as the stock of the day today. And it is with that reason that while the stock is up 7%, we're getting in our colleague Varsha to talk about Apollo Hospitals. Varsha, over to you.
Well, thank you so much for that. Good set of numbers the company has posted. They did beat the estimates across all the metrics. The margin expansion that you're seeing is led by Apollo Healthco, and also the reduction in Apollo 24/7 losses has also helped into margin expansion. Hospital business, if you see, have also saw a margin expansion, and the realization per patient grew 9% year on year, and the Healthco
turned PAT positive in Q1. So the good expansion that you're seeing and the good numbers you're seeing is one of the reasons is Healthco, and which has turned PAT positive in Q1 also. Let's talk about the segmental analysis. That healthcare services revenue were up 11% year on year. That is a hospital business. And if you see that AHLL revenues, that is Apollo Health and Lifestyle Limited, which covers diagnostics as well, was up 19% year on year. And Apollo Healthco revenue, if you see, were up 19%. And the GMV of Apollo 24/7 was at 682 crore. Now, onto the capacity expansion details, they've announced expansion of 700 beds in 2 phases in Bangalore, and the total bed capacity will be 1500 beds, while they are also on track to add 4370 beds over the next 3 to 4 years. Let's see what brokerages has to say on Apollo Hospital, where we have City, wherein they have maintained buy with target price, determining upside potential of 13.5%. Apollo Hospital is their preferred pick, and the consolidated EBITDA came 9% above their estimates. And but they have also cited out some of the risks. That is, the execution is a key risk according to City. Delays in setting up hospital projects would be one of the risks that the City is targeting. But overall, if you see, a good set of numbers, and in fact they continue to focus on volumes in FY26 and beyond, says Sunita Reddy, who is the MD of Apollo Hospital. She emphasizes on a strategic priority on driving patient volumes to sustain growth. Do listen into that slides of conversation.
So as we look at the future, I think the most important thing for hospitals is that we will continue to focus on volumes. As we focus on volumes, we will see that operating leverage improve, and therefore EBITDA margins improve. Currently, hospital services were at 24.3% EBITDA margins, which is an 88 basis point improvement over last year. And I'm quite confident that with higher volumes, we should be able to increase this. We also had an improvement in ARPP of 9%, which our ARPP now stands at 1,72,000. So there is a 9% improvement in ARPP coming from both tariff, payer mix and case mix.
Alright, so that was the management of Apollo Hospitals. Kush, on the charts for Apollo Hospitals, what is the support and resistance that you're seeing? And any other count in the space specifically that you're liking on the charts?
So first on Apollo, I think this is a very strong candidate. And if you want to add to your portfolios, the stock more than doubled in the last 3 years, then went into a consolidation phase and retraced from the 38.2% retracement mark. Now you're seeing a breakout above that 7,600 level, which it could not for some time, a good part of the last 8 months or so. I think now levels of 8,000, about 8,300 are also very much on the cards. Maybe you could place a stop loss just a little under the 7,600 mark, or 7,550 thereabouts. You place a stop loss and stay long. Amongst the other stock, the one that has actually done very well and continues to impress is Yatharth Hospitals. This one too has had a very sharp up run. I wouldn't suggest buying right now, because on daily and the weekly time frame, it's slightly stretched. So maybe if you do get a decline towards the 685 zone, that's where you start to accumulate and hold again. So Apollo looks good, a clean breakout after a while now, and Yatharth as a momentum trade, part the buy on dips.
Okay, so that's the take coming in. Titagard Rail Systems, that was the other company in focus, and we did a KYC on that today. We spoke to the company's Vice Chairman and Managing Director, Umesh Chaudhary, and asked him about the wheel side ramp up, because that is what essentially dragged the top line where the company was concerned, and the potential timeline regarding the expansion. Here's what he had to say.
Coming to the wheel side issue, the problems that we faced in the previous quarters, and to some extent in the earlier quarter as well, was solely on account of non-availability of wheel set from Rail Wheel Factory, which is the undertaking of the Ministry of Railways. They had certain production challenges, and as we have written in our press note and also in our analyst call yesterday, investor call yesterday, that over the last 2-3 weeks, we've seen the problem of the wheel sets having gotten resolved. So I would say that end of July, onwards or beginning of August onwards, this problem seems to be a thing of the past. As far as our other production facilities, order book, everything is in place. So the only thing as far as the freight rail segment is concerned, the only hold up that we were facing was availability or lack of it for wheel sets, which is now resolved.
Okay, so that's the take coming in from a Titagard. Ambrish, do you have a view on some of these railway counters? Titagard, for example, I mean, just something I noticed while I was trying to understand the company better, the stock's fallen nearly 50% from its all-time high. Are these opportunities which you'd believe that one would want to tap into because the tailwind is quite strong sector-wide?
No, especially when most of these stocks had become multi-baggers. I'm talking of both railways and defense. I mean, the mood question which I had raised at that point of time, I'm talking about 9 to 12 months back. The mood question which I had raised was the execution risk. People were discounting the order flows, but no one was taking into account the execution risk. And clearly, what Titagard today is talking about, the supply chain issues for wheels, is clearly an execution risk which is playing out. Now, post this earnings and the sort of, the crack which you have seen in this stock in the past couple of months, like you rightly said, it's nearly 50% down. I think at these levels, it looks decent. Especially looking at, the management commentary that these issues are behind them, and possibly they will make up for whatever losses they had in FY25 and the first quarter FY26. I think this will be made up in the whole of 26. So I think that is quite positive. Extremely good order book position, 26,000 crores of order book right now. So I think at these levels, if one is having a long-term view, I think one should start buying.
Okay. Amrish, anything on Yatra Online? It came out with its earnings a few days ago. The stock has been flying in trade and how? I mean, it's up today as well and up 52% in the past 3 odd days. Just trying to understand, because I was just looking at the trajectory of earnings as well. It's not like this quarter has been exceptionally well. They've done good in the past 3 quarters as well. Just trying to understand as to what has led to that kind of an uptick in stock.
No, I think, one thing is that the stock had underperformed also in the recent past. If you see, it had in fact come down from, levels of about 130, 140 to levels of, I think, about 75, 80. From there, it had just bounced back to a certain extent. So I think these earnings possibly was some sort of a trigger, and then you had momentum players getting into the stock. But after this sort of a move, I think at 150, it's, I think, fully priced, slightly overpriced. So at this point of time, I'll not really buy fresh. And in case someone is holding who have bought it at lower levels, I think it's a good opportunity to book some profits.
Ambrish, what about something like a JM? Equally good move on the stock. We've seen the stock more than double over the last couple of years. In fact, nearly triple now when I'm looking at the stock price at 185. How does this one look? Turn around at play?
Yeah, but then see, already, the good news is there in the price. So I don't see it really moving up too much from here. We could possibly see levels of about 200, 210. If one is playing for that sort of a gain, it's fine. But otherwise, I don't think it really, worth buying at the current levels as an investment.
Jain Integration is the other counter that's doing well in trade today, both in terms of volumes as well as the kind of spike the stock has seen. It's up 16%. Anything on the charts, Kush, that you're liking?
So again, massive underperformance on this one for the last at least few months, and in the recent times, if you see from early June as well, the stock's actually seen a downturn. This is a good and a welcome up move on this one. 50 was the psychologically important mark, but also the 20 DMA. I would wait before initiating a fresh trade from a near-term perspective. If you're holding, that's fine. You could keep a stop loss near the low that it made and around the 45 mark. But for a fresh initiation, I would suggest wait. See if the entire selling pressure that's come about, is indeed over and the stock actually moves higher. This momentum could take the stock to 57, perhaps even 59 kind of levels. But as I said, fresh initiation, give it one more day. It's had a massive round of selling, went into deep oversold territories and is recovering from there. So yeah, not suggest to buy a fresh just today. Maybe tomorrow or day after if it does indeed hold up around these levels.
Well, you have Insecticides India, numbers on your screen, stock down 6%. But let me quickly switch focus though. Sidelines of the MK annual conference, we spoke to Amrit Singh of Max Financial. He's their CFO, about their earnings and the company's outlook going forward as well. Listening to a slice of that. Everything that's happening in the life insurance space, and it's an interesting space, and Max Financial in particular, you know, an impressive set of numbers where Q1 is concerned. Mr. Singh, talk to us about the sustainability of this and you know, the likelihood of you doing 24-25% margins, which was what you've guided us for FY26. Give us that perspective. What's going to drive that margin up?
Morning. No, I think we've continued on our strong sales momentum, and this is now over 12 to 14 quarters of actually demonstrating faster than market growth. And given how our distribution is panning out and the secular nature of growth that we are witnessing, I think we are fairly confident of ensuring that we deliver better than market outcomes with respect to our growth. Coming specifically to the margin question, I think aided by shift towards favorable product mix and continued momentum in products of segments of choices like protection and annuity, I think we continue to remain confident that 24-25% guidance of margin profile, which is an enhancement of last year margin, which we ended at 24%, is quite doable during the year.
Talk to us about the sustainability of this near 20% growth in APE. Is that the internal target? Are you not really benchmarking yourself against industry and saying that, you know, we'll go out there and grow?
No, so I think our stated position is that the market growth rate, we will deliver 3 to 5% higher growth rate than the market on absolute basis, and that's what we'll endeavor. You know, strong quarter one, our AP growth was 15%, though adjusted basis the growth was 23%. We do expect, you know, the growth rates to range between 50 to 20% kind of levels for the full year. And more importantly, I think the efforts will be to ensure that we are growing faster than the market.
And larger focus on profitability, Mr. Singh. So will that mean that you will continue to focus on non-par as opposed to par, or will you like to grow absolute VNB? What's the stated position there?
No, so obviously it's absolute VNB growth always as the primary focus and objective. But this specific year, we are, you know, we have been guiding for an improvement in margin, which is a bit of a mixed play. Now, quarter one, we had a successful launch of a non-participating design product. We do have interesting products coming our way on the participating side as well. So you will see some bit of balancing. There was an effect of, you know, superlative growth coming out of non-pars in the first quarter, but we do expect some of that to get balanced as we progress during the year. But needless to say, absolute VNB growth, we do aspire to grow it faster than APE this year on back of the fact that we are indicating an expansion in margin profile from 24 to 25% this year.
Got it. And for how long is that kind of metric sustainable? You started off a low base, but for how long is this absolute VNB growing faster than APE kind of trend going to go on for, in your opinion?
Right. So I think if you look at our distribution mix, our product mix, we see and we feel quite confident that it's very balanced. And very frankly, in our heads, a 25% margin is a good place to be. Anything over and above that margin profile, if we start experiencing, we will be very keen in kind of flowing that back in building distribution and expanding distribution further to continue, you know, accelerating growth on the sales side as well. So I would say this is a near-term phenomena that we are expecting it to kind of, you know, improve this year. But 25 is a stable state number that we internally aspire for.
Got it. What has changed with Axis coming in?
No, so Axis, so there are two things actually. There was a rebranding that we did in December, where Axis name and you know, the brand was included in the brand of the company, and the company was rebranded as Axis Max Life. This has actually aided very positively with respect to our brand consideration and brand awareness scores improving during since this period of transition. And we have continued to see good momentum there. Also on overall brand search queries that we experience on our online platform, there has been a marked improvement. That was the thesis. The thesis also was that beyond tier 3, tier 4 cities, the brand acceptance would become much larger. We're happy to report that we are seeing actually positive trends on all those metrics. And that was one important consideration. Axis became a co-promoter now many years back. I think Axis' overall guidance to the business and kind of enabling the business in direction of consolidating its position, becoming stronger. Some of those benefits we have been gaining for ourselves.
Well, that's max for you. But we've spoken about some of these pockets. I'm just trying to figure out stocks which, with the indices now being 0.64% higher, might be doing better in the last few minutes of trade. And are there some stocks? So Alicon Castalloy has had an uptick, Sasken has an uptick, and HBL Engineers all-time highs of 744 currently, up 7% as we speak. So Nifty is doing well, but Alicon Castalloy, Sasken, Tech, HBL Engineers, HBL is doing extremely well for the last 2 or 3 days actually. So keep these stocks at the back of your mind. Actually, Kush, as we wrap up with you, a word on HBL, some good results. Amrish, I would love to know from you as well, but Kush, to you first. I mean, for people who've riding these gains for the last 2 or 3 days, good to take money off the table?
Instead, I would suggest keep riding because
keep
even
riding,
today,
okay.
if you see the volumes are spiking up. The stocks actually at the high point of the day. I think I would suggest a trailing stop loss near the 1730 mark rather than a book profit. There's good momentum, 3 days of good gains as you suggested, and still going higher. So keep riding, keep 730 as your trailing stop loss.
Well, strong moves over 5 years for sure, but 5 days is the chart, which will show you how well it's moved just in the last 2 or 3 days. We're talking about Yatra and the splendid gains. This one has not done a Yatra, but has done reasonably well for itself. Amrish, any thoughts here on HBL?
HBL, I would say maybe book some profits to buy back. I mean, this is a stock to be held on. But then I think in a market like this, one should be taking some opportunistic trades. And especially when stocks like these have shot up suddenly post the earnings. I mean, it's good to take some profits and buy back. I think you should be able to buy back at least about 8-10% cheaper because the markets, I mean, have been volatile and will continue to be volatile. So utilize the volatility.
Okay. Amrish, Kush, thank you so much, gentlemen, for joining in today. Really appreciate your time this afternoon. Okay, as we hit that break, here out an NDTV Profit exclusive. Sources tell your channel that the RBI's Monetary Policy Committee may soon announce changes. My colleague Vishwanath Johnson with more details on this. Vishy.
All right, so sources are telling NDTV Profit that the MPC or the Monetary Policy Committee is likely to see a rejig, and this is coming in because one of the 3 RBI members will be replaced in the upcoming monetary policy, which is going to be held in October. Who is this member? Essentially Rajiv Ranjan, who was the Executive Director of the Monetary Policy Department and who was on the MPC since May of 2022, will be replaced by Indranil Bhattacharya, who will take over the Monetary Policy Department, who has actually already taken over the Monetary Policy Department earlier this week. This swap between Rajiv Ranjan and Indranil Bhattacharya happened. This is ahead of Rajiv Ranjan's retirement from the Reserve Bank of India. Indranil Bhattacharya, who was earlier heading the Economic and Policy Research Department, has moved to the Monetary Policy Department. Of course, the appointment to the MPC, that will have to be done after a nomination is conducted by the Central Board of the Reserve Bank of India. That is a requirement for the 3rd member of the RBI to be on the MPC. So apart from Indranil Bhattacharya, the MPC already currently consists of Sanjay Malhotra, the RBI Governor, Deputy Governor Poonam Gupta, and 3 external members, Ram Singh, Saugata Bhattacharya, as well as Nagesh Kumar. These 3 members are the external members, and there are 3 RBI members. The 3rd member of the RBI, who is going to be the ED of the Monetary Policy Department, essentially Indranil Bhattacharya, who will take over at the MPC.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Okay, welcome back. You're watching India Market Close here at NDTV Profit.